What is up, traders? Oh my gosh, bro. It has been 1 year and 2 days exactly since we last spoke. Truthfully, this video was supposed to be posted 2 days ago, but my gosh, bro, I've had to record this one a few times. I'm gonna let you know right now this video is going to be long, bro. I've got a lot in store for you. So, firstly, why did I disappear for a full year? Well, my then job found out that I was trading, and my then manager told me I could no longer create content or trade for prop firms and told me to terminate my activities because it went against their code of ethics or else they'd fire me. So I had to, bro. I did that. And it took me a long time to find a job replacement that allowed me to chase my dreams of trading, but I did it, bro. I could have came back earlier, but I was still learning and I wanted to dump any amount of time I had into learning to then come back and provide for you all. Now, to repay you for my absence, I am going to outwork your favorite trader, bro. Some really thought I quit. Fuck no. I will keep showing up. I will keep going hard. I will stay consistent even through downs, bro. I will keep working and working and working hard. I will never quit. I will win in the end, bro. I will torch anyone with fucking success, bro. Each and every one of you watching this video who watches all the way through, you're gonna do what you were set on this earth to do. You're gonna be who you were set on this earth to be. You're gonna have and you're gonna prove to everyone who doubts you, who tries to break you, who tries to stop you, who tries to kill your dreams. You're going to prove them wrong, bro. You must work your ass off while everyone is clubbing and hanging out, partying. You need to have your focus right. You need to work your ass off to have what you want in this life, bro. Shut the fucking noise out and get to fucking work. It doesn't matter if people think you're crazy. Stop caring what people think. Fuck them and fuck their opinions. Don't allow their opinions to prevent you from making millions. Not fuck that. Don't allow their opinions to prevent you from making billions of dollars in this life, bro. Open your mind, open your notebooks, and let's get fucking rich, bro. I am going to overload you with knowledge that they don't want you to know. And who's they? Corporate America, the big banks, politicians. This information I'm about to share is often hidden, not taught or shared in the world. They don't want you to know this because it's not the traditional way of making money. And unless you're out searching for yourself, you don't learn the information I'm about to share with you. I'm going to tell you everything you need to know, and I'm going to put it in the most simplest terms that even your grandma can understand. And bro, nothing I say is financial advice. I repeat, this is not financial advice. I am not a financial advisor. Do your own research. I'm also not going to bore you and waste your time. I'm going to try to make this video as short as possible, but also give you everything that you need to go from zero to hero, bro. I have it all written down in a Word document as well, step by step. Every concept that you need that I'm reading off word for word in this video. If you want the document, you can check the description for that. I am leaving that link to that document. It's going to be for you, all absolutely free. And it also has more links within the document for you to prosper and do more research, bro. So I'm leaving that for you. Check the link in the description, dude. I promise you are going to learn so much instantly with this video. It's going to be a brain fuck, bro. You may need to watch it more than once, truthfully, but share this video with your family, your mom, your dad, your siblings, your cousins, your friends. Share the wealth. Do not gatekeep, bro. That shit is so wrong. And please take notes. This is years and years and hours upon hours of knowledge that I value and hold close to my heart. What you're about to receive is a skill set to print money for the rest of your life as long as you take this serious. And I'm talking scaling to 6 to 7 figures a year or even more. Understand this right now. This video might seem long, but there will not be a minute you won't be learning, bro. This video has over 100 hours of information simplified to take your trading to an advanced level. Stick around too, because after we go through the ICT concepts, I'm going to dump some meme coin game on you too. If you don't know what meme coins are, they're a cryptocurrency that's created from a meme idea or popular trend or political news event. Legit famous people are releasing these coins as well, bro, and there are like 15-year-olds turning $100 into 20 racks. It's absolutely insane the opportunities in our world right now to get rich as fuck, bro. So stick around. It's okay to pause the video. notate on your notes where you pause the video and then come back to it later with your notes to the same timestamp and resume the video. But with all of that being said, bro, let's get into it. So, starting off with trading, the basics. If you know the basics, you could totally skip this part, but this is the tradingview.com home screen. We only use this site to do analysis. To pull it up, you type in tradingview.com. This is going to be the site right here. Now, right here, you can see there's a bunch of different stocks, there's ETFs, cryptos, forex, futures, bonds, all of that cool stuff, different types of currencies, different types of crosses, different types of anything. Like this is really beautiful, bro. This is awesome, but we're going to stick to forex. We focus on forex over here, okay? Now, the strategy I'm going to teach you, you could use it for futures, you could use it for crypto, you could use it for stocks, indices. It's literally replicable to any other market, but we're going to focus on forex, okay? Now, to pull up a chart, you can simply click on these and you can actually click right here, launch full chart view. You could type in, let's say right here, you click on the search bar and you go to forex. These are going to be like the euro dollar by the US dollar, the British pound by the US dollar, all that cool stuff. And over here are going to be like the, how would you say, like the brokers of the coin, if that makes sense. These are going to be the platforms that these specific not coins, sorry, that these specific currencies are trading on, okay? So right here, we're going to focus on, let's just say like the euro dollar right here, okay? So we're going to go to launch chart. I usually always go with the Oanda platform, sometimes forex.com, but FXCM is another good one. I usually just go with those three. There's always going to be those three, okay? So this is how you pull up a chart, and you could zoom in and out with your little scroller on your mouse for your computer, or down here at the bottom you could click the plus to zoom in, to zoom out. You could grab the chart, left click on it, and you could scroll left and right. You can also left click right here and you can move it up and down right here. And then if you need to reset the chart, like right now our view is ugly, just go over here to the price and double left click. Okay, false. I guess that's not working. All right, anyways, you could actually reset chart view with this one right here. This is what I usually like to do. I guess they don't do that no more. It's interesting. I don't know, who cares? Anyways, but you can reset the chart view right here, okay? So zoom out, zoom in, reset chart view, all that good stuff right there, right? So at the top here, you'll see the currency pair. You'll see different time frames. This is 1 minute, 5 minute, 15 minute, and you can click this time interval and you can see different time frames, right? Now, what are these time frames? So if I click D for 1 day, these right here on our screen, these are what we call candles. These are candlesticks, okay? So each candlestick, depending, it's specific to the time frame. So this candlestick right here, this black one that I'm hovering over, this has 24 hours within this whole candle, okay? Same with this one. These candles all take 24 hours from open to close to form the entire candle. Now, if I went to a different time frame, weekly, these candles each take a week from open to close to form the candle. Now, if I went to like 5 minute, all these candles take 5 minutes from open to close, and it's specific to the time frame you're on, bro. These candles are specific to the time frame that you are on, okay? So that's very simple. It's very easy. You can click around and kind of understand that. To the left over here, we have different tools, and you could click right here and see what type of tools they are, trend lines and all that cool stuff. You can see what I have as my favorites. I have the trend line as my favorite. I have a horizontal ray as my favorite, vertical line as your favorite. Whatever tools you find yourself using often, you could favorite them, bro. You know what I mean? I don't even use that gone box. I'm gonna unfavorite it. But you can like go through these tools. I use the long and short position here. You know, you could use different tools here to kind of mark up, like the brush right here. You could draw on your chart and all that cool stuff. And these are just different tools for you, bro. The text, I like to sometimes type, here is where we launch. Or like, you know what I mean? But these are the different tools. And whenever you favorite them, it's going to create a favorite bar right down here. And you could click on that. You could bring it up with the star right down here. These are going to be all of your favorites, okay? Now, after that, those are all the tools to analyze. Over here to the right, this is the price. Okay, we hardly really pay attention to price, and you'll kind of see throughout this video what I mean and why we hardly pay attention to it. But um, with that being said, basic terminology for trading, I don't want to bore you. I don't want this to be boring right off the rip. So again, the document link will be in the description, and I'm going to have links to basic Forex terms for you to know if you're not familiar with Forex, okay? But to keep it simple, bullish, if I say bullish, that means price is going up. Bearish means price is going down. Pips are how the Forex market is measured, okay? So pips, if we bring up that long position, long is another word for bullish. It's another word for buy, okay? So long is a buy position. Short, as you see here, short position is another word for sell. So short position is a sell position, okay? So long position, let's say that I place a buy, a long position right here, okay? You'll see this red mark. This is going to be a stop loss, okay? Stop losses are if you enter in a buy or a sell and price goes against you into negative drawdown. Drawdown is whenever, whenever you enter, if it goes up, that's profit. If it goes against you, that's drawdown, okay? So stop losses are if you enter and price goes against you, the stop loss will pull you out of the trade to stop a bigger loss, okay? And pips, again, are how the Forex market is measured. So if we look right here at the stop loss, this red area is the stop loss. Notice this number right here, 8.8, 6.5, 13, 14. That's pips, okay? These are important, okay? And I'll tell you why they're important later in the video, but you know what pips are. They're a way that the Forex market is measured, okay? You know what stop losses are. Now, take profits are the opposite end. Take profit is self-explanatory. It is where you take profit in the markets, okay? Lot size is the size of the position you enter on a trade. That is lot size, okay? I hope you were taking notes and you wrote down all of those words, because next we're jumping into the first concept. OHLC slash OLHC. OHLC slash OLHC. What does this stand for? This stands for open, high, low, close, or open, low, high, close. Now, hotshot, what do you mean by that, bro? This is specific to the candles, okay? Now, a bullish candle, remember what bullish means. Bullish means up. A bullish up candle, like these blue ones you see here, they are going to be open, because they're going to open, they're going to literally look like this. A bullish candle is going to open, it's going to come down to create the wick, the low. It's going to expand to create the high, and then it's going to close. And we see that right here with this candle. Look at this blue one right here, right? So this blue one right here, it opened, came down, created the low, which is this wick right here. Then it expanded, created the high, which is the wick right there, and then it closed off right here. Okay, so we have the open, low is the wick, expansion to the high, which is the wick, and the close. Okay, if we're looking at a bearish candle, okay, this is going to be the open, high, low, close. Okay, so we have the, on this black candle right here, this is a bearish candle, it's a down candle. So we have the open, high, expand down, low, and close. Okay, the open and close are specific to the body, and the high and low is specific to the wicks. Okay, that is the open, high, low, close, and the open, low, high, close. Again, the open, high, low, close is going to be a bearish candle, and the open, low, high, close is a bullish candle, bro. Understand that, and it's fractal to any time frame you're on. We're on the 1 hour. If we go to a daily time frame, on the daily time frame, you see these candles right here. We have these bull candles. They open, create the low, expand, create the high, and then it closes off. This bear candle opens, creates the high, expands, creates a low, and then it closes off. Okay, open, high, low, close, and open, low, high, close. This is how every single candle, no matter what time frame you're on, moves, but it's specific to the time frame you're on. It's algorithmic. Okay, next is going to be PD arrays. This is the next concept. PD stands for premium slash discount arrays. Arrays, they're just pretty much like a point of interest. Okay, the only one we're going to be discussing is going to be the fair value gap right now. Okay, what is a fair value gap? Well, if we take a look at the chart, right, if we look at the candles, you'll notice with the wicks, like how right here from this wick right here, then this candle, and then this wick right here. See how this wick right here and this wick right here, they overlap? There's no gap in between here, right? There's none. But if we look a little bit more up, you see how this wick right here to this wick right here, there's a gap in between here, and I could literally draw out the gap from here to here. There's a gap. You can't draw a gap on this, bro. You can't. Like, there's no gap here. There's a gap here, though. And then if we look a little bit lower, there's a gap right here. You see the gaps between this wick and this wick. There has to be a second candle in between them, okay? This candle in between them, that's where you'll find the gaps, okay? And a gap is a gap. It can be very tiny, bro. It can be super small. Like, look at this small one right here. Tiny little gap from here to here. You see that? From this wick to this wick, there's a tiny little gap. But gaps don't always happen. You could see, like, right in here too. There's between this candle, this here and this here. See how the wicks overlap? There's no gap. Wicks overlap, there's no gap. There's no gaps throughout this area except for here. There's no gaps in this area. There's not even any gaps in this area. All of the wicks overlap. These are fair value gaps. Why are they fair value gaps? Because with the wicks overlapping, whenever the wicks overlap, like in these areas right here, price is an algorithm. It's built to provide both buyers and sellers equal opportunity to get into the market. That's why the wicks overlap. It's providing equal opportunity. Fair value gaps create a gap, and it doesn't provide that same fair opportunity for those to get in. For example, right here with this gap, it didn't come back down, and buyers always buy at a low and they always sell at a high. Sellers always sell at a high and they take their profits at a low. Okay, so if we're a buyer on a bullish fair value gap, so a bullish fair value gap is whenever it's an up candle. That's what makes a bullish fair value gap. A down candle is what makes a bearish fair value gap. Okay, so with that being said, if it's a bullish fair value gap, it's not providing fair opportunity for buyers to get into price because it doesn't bring a wick down for buyers to buy low. Vice versa, it doesn't allow sellers opportunity to get in for a fair price. It doesn't sell high. Okay, so these gaps, price likes to target them as like a magnet to provide that fair opportunity to the buyers and sellers. It doesn't come immediately always. Sometimes it may take a moment. But this one, you could see it came immediately on the next candle. You see that? It created a gap on this candle, and then immediately the next candle it gave opportunity. But you could see with this gap right here, it didn't give opportunity until over here. It came back into it, right? Now, keep in mind too, fair value gaps they get disqualified, if that makes sense. They become invalidated if and when a candle closes above it. Okay, so whenever a candle closes above it, that invalidates the fair value gap. Fair value gaps are valid whenever they get respected, like you can see right here. It got respected and it sent price lower. That is a valid fair value gap. This fair value gap was invalidated by the bull candle there. Okay, this is the fair value gap. There are way more PD arrays, truly too many. ICT himself says to just choose one and run with it, and fair value gaps are the easiest to find, and honestly less is more. So don't waste your time with every single PD array. It just overcomplicates your trading, and you want to keep trading as simple as possible, okay? That being said, next concept is going to be internal range liquidity and external range liquidity, okay? What is that? So right here, this is what candles target, aka the next draw on liquidity, okay? It's like a magnet. Again, this is either external range liquidity or internal range liquidity. Again, it's algorithmic. You want to train your eyes to see V's or hills. These are turning points. What I mean by that, you see how this is like a little hill? This is a little V, little V, little hill, little hill, little V. See, these are little turning points, right? See the little hill, little hill, little V. I could do this all day, bro. I'm just training your eyes. See what I see? You see the little hills, the little mountains? They create tops. And then the V's create bottoms. You see those? These are turning points, as you can see. These are turning points, right? Now, why am I doing this? Because these, the hills and V's, are all almost always, like 90% of the time, that is external range liquidity, okay? So what is internal range liquidity? Those are fair value gaps. Now let me draw an explanation. So price, excuse me, will create a high here, right? Oh my god, that's ugly as hell. It'll create a high here, right? Whenever price creates that little hill and it expands through it, it targets and runs through external range liquidity. And then price oftentimes comes into a fair value gap to provide fair value, and this is internal range liquidity. Why is it internal range? Well, whenever price expands higher from this point to this point, it creates a range, right? And then it retraces internally within the range. This is internal range liquidity, okay? Liquidity is another word for like orders or like money in the market, right? So like there's orders that are waiting in this area at the fair value gap to be filled, to provide fair opportunity to buyers to get into the market to continue higher towards external range liquidity. Okay, now if we're looking at a bearish market, it's creating the V's, right? See the V right here? Then it creates the range after expanding through external range liquidity, because it's external, right? It's outside of the range, so that's why it's external range. Then it retraces internally within the range, internal range liquidity, and then it expands, right? If we look at the market, let me give you an example right here, bro. So right here, look at. So you'll see price expanded, took out external range liquidity right here, and then it retraced into internal range liquidity. Now there's no gaps right here, but on the lower time frame, I'm going to teach you within this video where you could find the gap. It's going to be part of our time frame alignment concept. I'm going to teach you how to get to that, but there's a gap within here. You just can't see it on this specific time frame, okay? This is internal range. This is the bottom of the range, and this is the top of the range. Price retraces internally in the range, and then it expands towards external range liquidity, okay? The hill, the little hill, is external range liquidity, and then price retraces into internal range liquidity. And look at right here, bro, here's a fair value gap right here that it retraces into. Perfect example. Internal range liquidity is right here. And see how it got close, It got close to closing below it. It looks like it barely did it, but this right here isn't technically a close, okay? It literally respected the hell out of that bullish fair value gap right there, okay? Then price expanded, took out external range liquidity right here, expanded up, and then it retraced into this fair value gap, internal range liquidity. Look at that, bro. It's all algorithmic, dude. Look at this. These candles tap into the fair value gap and then send price higher, taking out this external high right here. Okay? Retraces. There's not a fair value gap here. Well, there's a tiny, tiny one. It's very tiny. But you can see how it gets disrespected by the black candle. It gets closed below, and then it closes back above. I personally like seeing it close back. If it closes below and it invalidates it, but then it closes back above, I personally like to revalidate it. I like to say, okay, well, now it's revalidated. This is a valid fair value gap. Okay? And you can make that rule yourself, or you could totally eliminate that. With trading, we want to create rules for ourselves because at the end of the day, this is a business, and I'll explain that in the end. But you want to create rules for yourself to prevent losses, okay? And you want to be able to, identify whether or not this will be a good rule to create. And personally, I like it whenever it closes back above 2. And then whenever this candle's wick taps into it, that's beautiful for me. You know what I mean? That looks good. I'm going to show you how to get into those trading opportunities. But I'm just showing you right now internal to external range liquidity. Again, internal range liquidity are going to be the fair value gaps. External range liquidity are going to be the V's and hills. Remember that, okay? Another thing I want to mention, external range liquidity is where majority of traders put their stop losses and or take profits. So like a lot of the time traders, whenever they like buy down here, they'll target the high here, external range liquidity, and they'll take their profits right there. Or people will be buying down here and they'll put their stop losses below it, below the V's, or they'll even put their stop loss below this previous V, right? External range liquidity. So just to give you an idea right there. And our with internal range liquidity and external range liquidity, it provides us the next draw on liquidity. It tells us where price is likely to go to next. So it's part of our bias in higher time frame direction. I say higher time frame because again we use multiple time frames. I'm going to teach you time frame alignment in this video as well. Okay? So price moves in one of 4 ways, okay? Price will either range and consolidate. People call it a consolidation, people call it a range. It's pretty much whenever price is moving sideways. It's not having any exponential like movement up or down. You know what I mean? Like this right here, this is a sideways movement. This is a range slash consolidation. A normal movement is whenever it moves up or down. See how it's moving down right here, or it's moving up right here? Whenever it moves sideways, like right here, it's not really moving anywhere. You know, like from this point to this point down here, it's not making any exponential movement. It's just moving sideways. Literally what I just drew up here. It's literally just that. This is that, bro. That's a range or a consolidation. This is when price isn't moving up or down significantly. It's just moving sideways between 2 price levels. Right now, the price level here is if you look to the right, 1.09846 and 1.05993. Okay, and that's not exact, but to give you an idea, it's between these 2 price levels. Price is just moving around and it's not making any exponential movement higher or lower. Okay, now price often consolidates and it has a range, and it does this to build liquidity on each side. So there's buyers down here. Every time it comes down, they buy. Every time it comes up, they sell. And whenever they're doing that, they're placing their stop losses above here. Sellers are placing stop losses above here, and buyers are placing stop losses below here. So price oftentimes likes to target stop losses. Keep that in mind. I'm going to explain more within this video, but this is the first way that price likes to move is a consolidation range, okay? Second way is an expansion. This is when price is breaking and closing above highs or below lows, aka external range liquidity, okay? So that's an expansion. An expansion is whenever it's expanding higher. Expansions are this leg to take out the external range liquidity. If we did it like vice versa, this is an expansion. This is an expansion to target the external range liquidity, okay? Internal range liquidity. Uh, this is when a retracement happens, okay? Remember internal range liquidity? So retracements are another phase of the market. So here is an example for you right here. Retracement into internal range liquidity. Again, this is the range from this point to this high. This is an entire range. And within this range, we identify a fair value gap. That's internal range liquidity. Then the expansion to external range liquidity. Retracement into internal range liquidity. So expansions happen when they're going towards external range liquidity. Retracements happen when they're going to internal range liquidity, okay? And pretty much to keep it simple, it's when price just expanded and the volume dies out a bit, or it takes a little rest so it retraces back into the expansion leg, aka internal range liquidity. A reversal. This is when price is retracing but just continues toward the retracement direction, taking out the expansion origin. However, we have an advanced way of determining our reversals, and we'll go over that later in the video. But right here, for example, we had the retracement, right? It was retracing into internal range liquidity, but instead it came all the way down and took out this external range liquidity down here. This becomes a reversal. Oftentimes it flips the market the opposite direction. Okay, same thing right here. Reversal, it just took out, it retraced into internal range liquidity, but it didn't stop there. It took out the external range and it flips price. If that makes sense, okay? And again, I'll give you examples throughout the video. This is like consolidation. We went over internal range, so like right here, expansion, retracement, expansion, retracement, expansion, retracement, expansion, reversal. Why did it reverse? Because it took out from this point here. This is the range, remember? This is the range. Reversal. And now this becomes the new range, right? And it reverses again. Reversal. You see what I mean? I'm going to show you better ways to interpret it, okay? You're going to really, truly understand the hell out of it later in this video. But I'm just throwing concepts at you. Take notes of them and try to understand them, because towards the end, we're going to put all of these concepts together so that way we could create a model and you'll get a lot more familiar with the actual concepts, okay, whenever they're placed into a legit model. Now, next concept is going to be the power of 3, aka AMD. This goes hand in hand with open high low close / open low high close. It's at the open of every single candle. So AMD, A stands for accumulation, meaning price moves in a range, or consolidation. And it does this because traders are buying, putting stop losses below, and selling, putting stop losses above. And then with that being said, price is engineering liquidity, aka orders into the market for the algorithm to eventually take out by running those stop losses. Accumulation happens at the open of candles. Accumulation is literally a consolidation or a range, okay? So what we just went over, and it happens at the beginning of every single candle, okay? I'll give you an example. But AMD, the M stands for manipulation, meaning price will purposefully run into those stop losses that accumulation engineered, stopping out all of those traders and taking their money. This happens at the high or the low after the open of a candle. This is also known as a Judas swing, named by ICT, okay? And manipulations lead to reversal. That's where we want to enter in after they stopped everyone out to then catch the D for distribution. So again, AMD. D stands for distribution, meaning price will then send to the opposite direction of the manipulation. So anyone who was selling price to go lower got stopped out by the manipulation just for the algorithm to then send price lower immediately after, vice versa. And this is what many smart money traders know as a stop hunt or liquidity grab. This happens after the open, which is the A, the high or the low, which is the M, then distribution creates the pretty much the higher low for the day, or vice versa, pretty much. Okay, so this is how it's gonna look, right? So to give you an example, it's gonna have the open. The candle is gonna open, low, high, close, right? Now at the open, it's gonna have a little accumulation or something, right? It's gonna engineer liquidity on both sides. So sellers are gonna sell off, put their stop losses above. Buyers are gonna buy it, put their stop losses below, and then price will then manipulate to then take out everybody's stop loss who was buying, and then send it higher, taking out everybody's stop loss who was selling. It collected all of that liquidity, bro. It collected it, and then it creates the high. We want to enter in down here. We want to look for an entry down here to catch that, to take out and target everybody's stop losses and create the high. Vice versa, bro. If it's like open, for example, if it's an open, high, low, close, oftentimes, oops, it's an open, high, low, close. Oftentimes, again, accumulation, people will be buying it, putting stops below, selling it, putting stops above. This happens at the open of every candle, bro. This is algorithmic. Every single, it could be the 1 minute time frame candle, bro, but you would have to look at it on way smaller time frames. I don't recommend it, but it can be even on a monthly time frame candle, bro. And it might take a while, but dude, it's fractal. Fractal meaning it can be on every single time frame, okay? And then again, whenever sellers put their stop losses above, buyers put their stop losses below, price will manipulate, take out everybody's stop losses. Every seller just got wiped out of the market, and then it'll expand. Every buyer just got wiped out of the market. We entered up here. We weren't bothering trading over back here. We entered up here. We knew what we were looking for. It expands, and this is where we take our profits, okay? So if we look at every candle, for example, if I go to a daily time frame, look at this most recent daily candle right here, right? So these candles, every day opens at midnight, right? So with the candles though themselves, they actually open at like if I'm not mistaken, at like 5 p.m. on the charts. I forgot to mention as well, you want to always make sure that your time is set to New York Eastern Standard Time. And to do that, you're going to come down here on your chart and put it to UTC New York. Okay, always set it to New York Standard Time and then click save up here. Save your chart. Make sure it's always set to New York Standard Time. Okay, and then also I forgot to mention, you could change the colors of your candles, change the color of your background and all that. Just left double click on the candles themselves. It'll bring up the symbol. You could change the colors of your candles, status line. You could click off all kinds of stuff, scales and lines. Canvas, you could change the background of your chart from like black, white, whatever. I like to keep it white because it keeps my eyes alive. But you can change everything, bro. Crosshair, you could take off the crosshair if you wanted to. See how I no longer have a crosshair? Or you could bring it back on, keep it on, and you could change the type of line so it could be a straight little line instead of like a dash or like a dotted line. However you want to do it, bro. Once you like set it up, you could click save and all that good stuff. I forgot to mention that at the beginning of the video. I'm glad that I remembered it right here. But jumping back to where we were. So it opens at like 5 p.m. on the chart, but actual day candles open at midnight. So let's say that, for example, this one's a bearish candle, okay? And using time frame alignment, we're gonna learn about it later in this video, but I'm just giving you an example. So you can see that this daily candle opened, created a high, expanded lower, created the low, and now it's like coming to close within the next 4 hours. We go to a lower time frame to kind of see what that looked like. From midnight, where's midnight? Midnight is always going to be 0, right here, okay? This is beautiful, bro. Look at the consolidation, the accumulation right before the manipulation, taking out everybody who was selling and placing stop losses right above here. Look at this, bro. This is such a phenomenal example for you guys. Accumulation, manipulation. This is where we look for an entry, bro. We look for an entry right here in this area here, and we look for it on the lower time frame, so that way we could get a fire entry, bro, and we could catch a beautiful position to the downside. You see this, dude? This is accumulation, manipulation. It manipulated above, took out everybody's stop losses who was selling it, distributed lower, taking out everybody's stop losses who were buying it, bro. Beautiful example right there. This is AMD. Okay, accumulation, manipulation, distribution. This is the power of 3. And again, this goes hand in hand with the open, high, low, close, because here's the open of the daily candle. It opens at this blue candle, high, low, and now it's going to be closing soon. I hope that clicked, bro. That should have clicked for you, because that shit was a powerful freaking example. I hope that was like, holy fuck, that was fire. Next concept, my friends, is market structure. Market structure provides us direction in what the next draw on liquidity is. This goes hand in hand with internal range liquidity and external range liquidity, okay? This is pretty much when the wicks of candles are rejecting wick lows of previous candles and breaking and closing above highs of previous candles, leading to higher prices. Vice versa, when the wicks of candles are rejecting wick highs of previous candles and breaking and closing below lows of previous candles, leading to lower prices. And you can drop to a lower time frame to zoom in and see a bigger breakdown of price doing this exact thing. And I'm gonna give you examples again. So right here, bro, look at the wicks. So look at the candle wicks, okay? So if you notice, like right here, for example, these wicks, and I'm going to draw these lines right here to create a staircase for you. See how whenever it's going up, it's creating these higher wicks? It's like if they're stairs, right? It's like a staircase. They're going up, right? Boom, 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 boom. These are what you would call higher lows. These are lows, the low of the wicks, and they're all higher than the last one, right? These are all higher lows. Now if we look at the highs from these wicks, so like right here, for example, this candle didn't wick it out. It created a lower high. It's totally fine, but this candle broke above, closed above. This candle wicked above, and then from here it created like a small little range from this candle between these candles, and then it finally broke out right here. Okay, so what I mainly want y'all to pay attention to is if they are bull candles, you want to pay attention to the wick lows, okay? Now, you want to make sure the wick lows are going higher. And if for whatever reason a wick low gets wicked, like right here, that's when you want to see price close above, okay? This gives you sense of direction, okay? Or even close within. So I don't want to make this too confusing, but remember how we went over range / consolidation? A range, so whenever a candle has its wicks, whenever candles have their wicks, from this wick here to this wick here, between these 2 points, these would be considered 2 price levels, okay? Between these 2 price levels, this is all a range, okay? So you can see right here, between this candle's 2 price levels, these candles began a range. They never came below and they never came above until this candle. And we could see that if we went to a lower time frame, for example, right here. It's from this point to this point. You see how it just moved sideways? It had no significant movement lower or higher until this candle over here. Then this candle had the breakout, right? So why am I saying this, bro? Why am I saying this? So I'm saying this because if these are bull candles and they're making the higher low wicks and the wick gets taken out, what you want to see by this candle that wicks the low, you want to see it either close back within or close above. This gives you conviction that price is going to go higher, okay? If it wicks below it and it closes below it, this gives more conviction that price is going to go lower, okay? Let me explain why. Okay, if I deleted everything again right here, like for example this big candle right here, right, it created this range right here between this wick and this wick. This is the small range right here, right, and it wicked below it and it barely closed within. What we want to see is we want to see it close above, like this candle, this bull candle, how it, see how it closed above, like with some volume is the word I want to use, okay? Because it came down and it could have closed like this candle. This was an ugly candle, right? Then the next candle opened and it closed below, and now it's respecting and creating these lower high wicks right here. Delete these. Lower high wick, close below this low wick, creates this new range between this black candle, so the low to the high. Notice how the green candle right here, it wicked above it and then it closed below this wick, okay? It didn't close below the low yet, but this next candle does, and at the same time it creates this lower high right here. Okay, I'm about to spend a lot of time on this specific concept for you guys because this concept is so important, you guys. See how this lower high closed below this low right here, this wick, this green candle's wick right there. This candle closed below this one. Now this becomes the new range right here, from this low and this high, okay? Price closed below it. New range is right here, right? And then look at this one. Price wicked above, closed back low, but it didn't close below this one, right? It closed within the range of this candle, okay? Then this candle, wicked above, closed within the range. This candle, wicked above both this one, and if I'm not mistaken, it made equal highs there. But you can see it wicked below this one. Not below, I'm so sorry. It wicked above this one. And then it closed below it, right? So these give us a sense of direction. Long story short, bro, if it's going down, you want to see these wicks creating lower high wicks. And if they get wicked, you want to see the next candle or candles close below this one, okay? Again, bulls, okay, for the bullish candles, you want to see them creating higher lows, okay, and oftentimes closing above the highs. If they wick a higher low, you want to see either that same candle or the next candle close above. Okay, this is not bulletproof, bro, but this will skyrocket your accuracy and win rate. I know this concept is very freaking confusing. I want to spend a little bit more time on this concept, and I'm also going to post more videos on it too, but let me give you more examples really quick. So right here, right, we have these bull candles creating higher lows. These lows are higher than the last, right? And then all of a sudden, this candle wicked below this one right here. See how the little teal candle wicked below the black candle, but it closed within this candle's range, right? It also wicked the high, it just didn't close above the high. Okay, now with this candle right here, it wicked below. If I deleted this one, see this little blue teal candle? This one, it wicked below it, and then it closed above the high. Once this candle closes above this high, my idea is that this next candle is going to be another bullish candle. It's going to create the open, low, high, close. Now if it's a bearish one, like for example over here, like let's say right here, let me look for a better bearish example. Sorry, I don't know if you could hear my dog drinking some water in the background. He's a thirsty boy. Anyways, right here, for example, okay? So, here. So, no, that's honestly a pretty terrible example. I want to find a good example for you guys. No, it's fine. It's a good example. So, right here. See how this candle wicked above this high, but then it closed below the low? This gives me tons of conviction. As soon as this candle closes below the low after wicking the high, it gives me conviction that this next candle, this one right here, is going to be a bearish candle. It's going to be an open, high, low, and close. We need to know and predict what the next candle will likely be, so that way we could position ourselves in either a buy or a sell. With trading, you need to know exactly what you are going to be doing for the day. Am I going to be a buyer or a seller? And you need to know why. This right here tells you what you're going to be for the day, a buyer or a seller, and it explains why, okay? This is market structure, okay? I know this concept might have taken a second. I'm going to make more videos on it. If you were confused about this, comment down below and let me know, so I know who, like, if you have questions, drop those questions so I know how to address those questions in my next videos going forward, okay? But with that being said, after understanding market structure, we're going to talk about the previous candle high and the previous candle low. So if our market structure is bearish, like this candle just closed below the low, this tells us market structure is bearish. And what are we targeting? External range liquidity. Why are we targeting external range liquidity? Because we just came from an internal range liquidity fair value gap. Remember how price moves, bro. This is giving you pure conviction that it's going to be bearish, that it is going to sell, okay? And whenever you have that conviction, now you know, if I am bearish, I am going to be targeting the previous candle's low as my take profit. Vice versa, if it's bullish, I'm going to be targeting the previous candle's high as my take profit. So for example, right here, whenever this candle closed, this next candle, I am trading it, right? And I look to enter in on the wick right up here because I'm looking to sell high. And what is going to be my target? It's going to be this new candle's low right here. The previous candle's low is going to be my target. So I'm going to enter up here, and it's going to be on a smaller time frame, so it's going to have a great risk to reward ratio, and my target is going to be this low, okay? Now, you could claim full position at the low, or you could claim partials and leave a runner running for this more opportunity for profit, but I preach not to be greedy in these markets. I'm going to give you a few keys and tools here at the end of the video as well to kind of help with that. But if you're bullish, for example, over here, if we're bullish and it's creating higher lows, closing above highs, or even if it just wicked a low, like for example right here, it just wicked this low and it closed within the range and it was a nice bullish candle. My mind is like, well, this next candle will likely be a bull candle. So I'm going to go open, low. I'm going to get in on the low to catch the distribution and target the previous candle's high. You see that, bro? You see what I mean? I hope this is all coming together and clicking, bro, because this is like a puzzle and it's beautiful whenever it's pieced together. It's awesome. Next concept is turtle soup. You heard it. Turtle soup. What the fuck is turtle soup, bro? Are we at a buffet? This is a stop hunt / liquidity grab, however you want to interpret it. Majority of traders consider every liquidity run, even external range liquidity, to be a turtle soup. And something this occurs during the manipulation of the power of 3. That's okay if that does help. However, the advanced way to interpret turtle soup is like an internal range liquidity grab. So like how we went over market structure wicking and rejecting lows and breaking and closing above highs. When price rejects the low, that's how I interpret an advanced turtle soup. And if we read candles like this, it also provides us bias and direction, bro. It is so fire. So example right here, this candle right here, this wick is a turtle soup, okay? A turtle soup is whenever external range liquidity, so again, retracement, expansion, right? This is external range liquidity, right? This is not a turtle soup. A turtle soup is whenever we like retrace into internal range liquidity and then we begin expanding towards external, but then it retraces one more time and it takes out that little small external range liquidity within the internal range liquidity. This is a turtle soup and it likely expands higher. And if we look at the charts, like right here for example, this little small movement down is a turtle soup, bro. You can see that right here. Turtle soup to continue higher. Now turtle soups, literally how do you interpret a turtle soup? It is when a swing like a V or a heel gets ran out and stop losses get taken only when it's within the direction we're trading, okay? So if this was bearish, for example, if price was coming down, if price was going like this or something, the fact that it just ran out this area, that would not be a turtle soup. But it's a turtle soup because we're going up, okay? Turtle soups are with the direction. It's whenever they run out the opposite, either mountain or hill or high or V or low in confluence with our direction, if that makes sense. For example, like right here, see how price is going down? This leg ran out. Everybody who was selling here, they put their stop losses above right here, and this candle wick took out everybody's stop loss. This is a turtle soup, and it goes with the direction, okay? Those are turtle soups, all right? That's how you interpret turtle soups, bro, okay? If we looked at like the daily time frame again, that's literally the turtle soup. That's perfect example. It was awesome. But like if we're looking, trying to find another better example for us. Right here, look at. So price is expanding, right? Price expanded, took out this external range liquidity, expanded up, and then it retraced into this fair value gap right here. See how it retraced into the fair value gap? Whenever it did that, look at how it wicked below this low and closed above the high. This candle right here. Boom. This candle right here created a turtle soup right here. This is a turtle soup because it's with that bullish direction. I hope that makes sense, bro. Turtle soups, bro. It's honestly, if it isn't either this one or this one up here, this one right here, then I don't consider it a turtle soup. And I'm never knocking anyone who considers turtle soups differently because we truly all trade differently. It's what works for us, bro. You know, I'm never knocking anyone, but I hope you understand that. Now, time frame alignment, okay? Time frame alignment. This is great. So, with time frame alignment, again, these are our time frames up here. So, the higher the time frame that you use, the less trades you will have versus the lower time frames that you use, the more trades you're going to have, okay? How does time frame alignment work? So, let's say you're using the monthly time frame as your higher time frame, okay? Higher time frame monthly. Then your intermediate time frame is going to be the daily. And then your lower time frame is going to be your 1 hour. Now, why do we use 3 different time frames? The higher time frame is to get our bias and direction. This tells us where is price going to next. The intermediate time frame gives us our point of interest. This is whenever price creates the open, low, high close. The intermediate time frame, whenever it creates that high or that low after the open, it's going to tap into an intermediate time frame, either fair value gap, internal range liquidity, or a turtle soup, external range liquidity type, okay? That's going to happen on the intermediate term time frame, okay? Lower time frame is where we take our entry on. That's where we look for entries, okay? So another one, higher time frame weekly. Intermediate time frame would be 4 hour, and lower time frame would be 15-minute. Higher time frame daily. Intermediate time frame would be 1 hour, and lower time frame would be 5-minute. Last one, higher time frame 4 hour. Intermediate time frame would be 15-minute. Lower time frame would be 1 minute. Okay, these are the 4 that you can use. Okay, choose which one you would like to use. All right, again, the higher time frame, the less trades you are going to have. The lower the higher time frame, the more trades you're going to have. So you kind of have to determine with your personal life, am I able to trade more, or does my personal life not allow me to sit on the charts all day long? Or, you know what I mean? If your personal life only allows you to trade like 1 to 2 hours a day, I mean, there's setups that can happen on the 4 hour higher time frame, but you can also set up to do like monthly or weekly. It's totally dependent on you. What type of trader do you want to be, bro? Do you want to be hella active, or do you want to be somewhat active? You know what I mean? It's totally up to you. Again, I also want to mention, the higher the time frame you go, the more conservative your trading will be. The lower the time frame you go, the more riskier your trading will be. Okay, keep that in mind. So those are time frame alignments. So if we're looking for like the market structure and the internal, the external, and all that on the daily, then I'm going to drop to the 1 hour, and I'm going to look for the open high or open low into a 1 hour PDA, either a fair value gap or a turtle soup. Then from there, I'm going to drop to the 5-minute, and I'm going to look for a reversal or advanced market structure shift, which we're going to go over here in a moment. And I'm also going to look for the entry on the lower time frame. I hope that makes sense, okay? So second to last concept, I believe this is, not necessarily. Smart money technique or smart money tool. This is SMT, okay? What is SMT? SMT happens whenever turtle soups or Like it's pretty much an extra confirmation that provides more conviction and confidence in a setup. It's simply a crack in correlation amongst correlated assets. For example, euro by the US dollar and Great British pound by the US dollar. They are correlated assets because the euro and the pound they move very similarly. So if euro dollar makes a high, but British pound dollar doesn't make that high, that's a cracking correlation because they move nearly the same. And then you can also add the US dollar index to those two for a third potential SMT opportunity. So pound and euro if pound dollar and euro dollar both made highs, but the US dollar index, which is inverted, meaning if GU and EU both made highs, the dollar index would make a low. But if the dollar index didn't make a low when both pound dollar and euro dollar made highs, that's a cracking correlation and SMT is present. This happens when prices above to ascend to the opposite direction. And we like to use this at advanced turtle soups and market structure shifts, also at the open high or the open low. Okay, let me just give you a little drawing example right here real quick. So let's say the euro dollar, let's say, I'm gonna write it down here. Euro USD, GBP USD. Oops, what the heck just happened there? Whoa, what was I pressing right now? GBP USD, and then what is it called on here? It's the DXY. Okay, so let's say the euro looked like this, right? And then let's say GBP also looked like that, right? And again, the dollar index is inverted, but let's just say it looked like this instead, right? Do you see the difference right here? You see how euro dollar made a higher high, pound dollar made a higher high, but DXY it didn't make that lower low, instead it made a higher low. You see that? Vice versa, if we were to do like if we were to do it like this, and then GBP did the same thing, but then the dollar did this. Do you see the divergence? This is divergence. See how it makes a lower low, this makes a lower low, but this one doesn't make a higher high. Instead, it makes a lower high. This is divergence, okay? Now, let's say, for example, euro creates a higher high, right? And then GBP creates this lower high, and DXY creates that lower low, right? So again, here's a cracking correlation from GBP USD. Euro dollar created a higher low, or not a higher low, apologies. Euro dollar created this high and a higher high. GBP didn't create a higher high. Instead, it created a lower high. This is a cracking correlation. And you can see the US dollar created that lower low. Again, it's inverted. So the US dollar and the euro dollar were the same when GBP cracked. Does that make sense? Now let's just say another example is when, let's say, Euro USD creates something like this, right? And then GBP creates the actual lower low. Well, this creates the higher low, and then DXY creates also that higher high. So DXY and GBP USD are correlated, and Euro USD has a cracking correlation. Okay, this gives us more conviction, bro. This tells us that our asset is about to go in the direction we're expecting. It's about to turn around. Okay, let me give you some examples really quick now that we kind of have that little idea going for us. If we look at that same, like for example, let's see with this one right here. So it was July 29th, Monday, where it had that turtle soup bullish. July 29th, Monday, it had that turtle soup bearish right here. You see that? Let's see if GBP USD had the same thing. 29th, Monday. So it did. All of them were correlated right here, okay? So you can see GBP USD, Euro USD, they both wiped out this high, and same with dollar, wiped out the low, right? I'm trying to find one where it has the divergence though. Let's see. See, maybe right here. Euro dollar, this was July 19th. July 19th, perfect. This right here is a crack in correlations. What the hell am I saying? Crack in correlation, bro. So right here, look at Euro dollar got turtle souped by this blue candle right here. We can see it on the lower time frame too. I'll show you. But GBP USD didn't turtle soup it. Let's see, this was on July 19th. July 19th, which was right here. This one also didn't turtle soup it. You see that? Now if I drop to a lower time frame, see how it never got ran? From these points, see on GBP USD, it created lower highs. If we went to Euro USD, it created a higher high. If we went to dollar, it created a higher low. See that? That's a crack in correlation, bro. This is a crack in correlation amongst correlated assets, and oftentimes the one that's running the liquidity, not making the lower high, but making the higher high, this is the one that you want to trade. Okay? This is the one that has the biggest move. Okay? So I hope that makes sense, bro, because that's SMT. Okay? Now market structure shift reversal. Market structure shift, this might sound a little crazy right now, but market structure shift is all specific to the closure below or closure above the 3 candle wick swing high or low. It must close, okay? And market structure shifts, they come in two forms. They'll be, and before I get into that actually, what I mean by the 3 candle wick swing low, 3 candle wick swing high, okay? If you notice at every like V or every heel, there's these 3 candles, like there's 3 candles that make up a 3 candle wick swing high, okay? It's this candle, and this candle, okay? Now what I mean by that is, like, let's say for example price does this number, right? It retraces where it's creating a V, right? It's creating a V. At this very point, oftentimes you'll see candles do this number, right? You'll see something like this. This is about to be super artistic. All right. Sorry that took a second. Why did I draw this? These are 3 candles at a V point, right? And these also happen at heels. But within these 3 candles, see the wicks? And see how this wick is longer than the wick to the left and the wick to the right? It's lower. This creates a 3 candle wick swing low. 3 candles wick swing low. And it happens at highs too, okay? So let me show you on the chart. At the high right here, see how these 3 candles here, this one here, let me turn off the, because this is pissing me off, honestly. Okay. All right, cool. So right here, notice this black candle right here, right? This candle with the wick, how the wick is higher than the one to the left and the one to the right of it. This is a 3 candle wick swing high, okay? 3 candle wick swing high right here. See that one right here that my arrow is pointing at? Between this one, and this one right here. This is a 3 candle wick swing high. 3 candle wick swing high right here. 3 candle wick swing lows right here. 3 candle wick swing low right here. See what I mean, bro? 3 candle wick. Got it. 3 candle wick swing low between this black candle right here, this black candle right here, and this teal candle right here. See how this one is lower than the one to the left and the one to the right? 3 candle wick swing low. 3 candle wick swing high. Right here, higher than the one to the left and the one to the right of it. 3 candle wick swing high right here. I hope that you understand that, bro. Train your eyes. Go through and just identify 3 candle wick swing low, 3 candle wick swing high, 3 candle wick swing low, 3 candle wick swing high, 3 candle wick swing high, 3 candle wick swing low right here. And they can be tiny ones too, bro. 3 candle wick swing low right here. You know what I mean? Go through and identify them, bro. 3 candle wick swing high right here. 3 candle wick swing low right here. 3 candle wick swing high. 3 candle wick swing high. See what I mean? I hope you understand that, bro, because we're going to use that right now with our market structure shift. Because again, it's all specific to the closure below or closure above the 3 candle wick swing high or swing low, and it must close, okay? The market structure shift comes in 2 forms. A breaker market structure shift, this is when price expands above or below the previous lower time frame high slash low into the intermediate time frame point of interest, then reverses and closes below slash above the most recent 3 candle wick swing in the expansion leg, okay? And a mitigation market structure shift, this is when price begins to try and expand above slash below the previous lower time frame high slash low into the intermediate time frame point of interest, but fails, then reverses and closes below slash above the most recent 3 candle wick swing in that expansion leg that tried, okay? I know that sounds like a lot of gibberish. I'm going to show you examples. The reason why I call them breaker and mitigation is because it's separated them, and ICT has his breaker block and mitigation block. Okay, I don't want to confuse you, but to keep it super simple, these are what we're going to use in this situation. It's always like the last down close or up close candle, and we're going to go over it, okay? So, that being said, this is where we're going to look for it, right? So, say for example, like right here. We look for market structure shifts in these areas, okay? And I'm going to show you how to get to this point, but what I'm looking for is exactly just to give you guys an example, okay? So once it runs out liquidity, right? Again, midnight, where was midnight? Like right here. Okay, midnight open was on this black candle right here. No, on this green candle right here. So where this black line is, this is the midnight open, okay? So again, we want to open high, and this is where we're going to be looking for entry at, okay? So whenever it goes high, what we're looking for on the 1 hour is we're looking for the turtle soup. And we're also looking for potentially fair value gap So we have turtle soup right here that it's taking out. This is the accumulation. Remember AMD, accumulation. This is the manipulation. It's manipulating into liquidity turtle soup and also this fair value gap, okay? So with that being said, on the 5 minute, because that's our 1 hour, and I'm gonna show you everything, bro. But that being said, this leg right here, if you notice, this was the last 3 candle wick swing low, okay? What we're looking for is the last 3 candle wick swing low, okay? Boom, there's the one, and price didn't close below it. Instead, it went higher, created this 3 candle wick swing low right here, okay? Went higher, created this 3 candle wick swing low, continued higher, took out this high right here, created this 3 candle wick swing low right here after taking that out. Now, you can see this candle closed below, and this would be considered our market structure shift. Now, we wouldn't be able to take entry here just because we're waiting for we're waiting for the breaker or the mitigation block, okay? And oftentimes it's like the last down close candle or the last up close candle. In this case, it'd be the last down close, okay? Which would be way down here or something. But with that being said, even if we did, because a lot of people consider this like a change in the state of delivery too, and they'll take entry off of the order block. I don't want to confuse you guys. Order blocks are like the last up close candle before the down move. So like this last up close candle before this down move, and it's specifically after a run on liquidity. So once price ran out this liquidity, this last big candle, once market structure shifted, this would become the order block, and once price tapped into it, a lot of people would sell. That shit's a scam, bro. That shit's a gamble. I will never ever tell you to use the change in the state of delivery. I will never tell you to enter off of that order block. That shit will fucking screw you over so many times. I have been screwed over by it so many times. Never use that shit, bro. That shit is terrible. I don't give a fuck. Like, whoever preaches that that shit's the best entry method, it's garbage. They don't know shit. They don't know what the fuck they're talking about. But again, right here you have the expansion, took out liquidity. Now we're going to look in this leg. Where's the most recent 3 candle wick swing low? Right here, right? Boom. So again, we wouldn't have entered off of this market structure shift just because we didn't have an entry opportunity. Right here, it didn't market structure shift. Instead, it went again higher. I don't think it took out this. No, it didn't take it out. Instead, created this low right here. It didn't close below it. Created this low right here too. But what we want to see the one that like tries to give us effort to go higher and then fails. That's going to be this one. So once price closes below this one here, with this big candle here, now we're looking for the mitigation block, okay? And the mitigation block is often always the last down close right here after the market structure shift, okay? Another way to interpret it is also like multiple candles. I don't want to confuse y'all at all, and I don't want to fuck this video up either because it's already too deep. All right, so a mitigation block is going to be like this last down close candle right here. Okay, you can see price didn't tap into it. That's okay. This would be the mitigation block right here. Another one that we look for too is the fair value gap. Okay, so right here, whenever price market structure shifts, we're gonna look in this leg right here. In this leg that market structure shifted, is there a fair value gap? Yes, there are two of them. There's one right here, and there's another one right here. Okay, let me delete the mitigation block for us So we have the market structure shifted, and then we have two fair value gaps. Now again, what does price do? It retraces into internal range liquidity, the fair value gaps, before expanding into external, okay? Right here, once price taps into this one, we can look for entry, okay? I would always put my stop loss above the swing that sent the market structure shift. Always, always, always. That would be my entry right here. So market structure shifts, bro. Market structure shifts happen at the open high or at the open low or at a turtle soup, things like that. So like, let me show you another example. Okay, let's go to like, let me find another example for us, because I'm gonna load you with some examples real quick. So right here, for example, at this leg right here, turtle souped. We drop to the 1 hour. What is the turtle souping into? Turtle souped liquidity, and it's also turtle souping into, look at fair value gap here and a fair value gap right here. Yeah, this is all hindsight, hotshot. Yeah, bro, doctors learn in hindsight, as ICT says himself, bro. Nurses learn hindsight, lawyers learn hindsight, bro. You gotta learn in hindsight, bro. You gotta learn from shit that's happened, you know what I mean? You can't fucking just predict shit, you know what I mean? You gotta learn how to predict shit. But right here, you can see that it ran out liquidity, tapped into a fair value gap. At this moment, we drop to the lower time frame, and we're looking for that market structure shift or reversal, okay? Let's go look for it. So this is the leg that took it down. We have the swing high right here, 3 candle wick swing high. This is a bearish example. We just went over a bullish example. 3 candle wick swing high. Expansion up. And closes above it right here with this green candle, right? Now this would be a breaker market structure shift. So what's the difference between market structure shifts, right? So a breaker market structure shift is one where it has the expansion lower and it takes out the liquidity, right? And then it reverses, okay? This is a breaker market structure shift, and oftentimes within this last leg that just took out the liquidity, like for example right here, within this last leg that just took out the liquidity, there's oftentimes a breaker block, which is often the last up close candle right here. Oops. The last up close candle right here. Why is it not working? Right here. This last up close candle before the down move that ran out liquidity and the market structure shifted, this candle becomes like an order block for price to come down and then tap into it. That's if you want to use it, okay? Not an order block. I'm so very sorry. Not an order block, a breaker block. A breaker block. Fuck order blocks. I don't recommend them, okay? This is a breaker block, okay? Now, a mitigation block. What is a mitigation block, dude? A mitigation block is whenever it's coming down, and instead of taking out the liquidity, it just hits this area and it reverses. It's almost like the SMT. Remember the SMT? This would be a mitigation market structure shift, because the market structure shifts off of this point right here, okay? But we need to see it give some effort to try to come down, and then it reverses. It can't just come right here, make a tiny move, and then expand. That's not a market structure shift, bro. It has to create a legitimate fucking hill right here, legitimate mountain, legitimate 3 candle wick swing high, okay? That's the difference between a breaker market structure shift and a mitigation market structure shift. Because again, in this one right here, before this last leg, that failed, because remember the mitigation, this is when price begins to try and expand below the previous lower time frames low into the intermediate time frames point of interest, but fails, and then it reverses and closes above the most recent 3 candle wick swing high in that expansion leg. So this point right here, the last up close candle before the failed down move, this would become a mitigation block. Okay, that's the difference between these two. This is a breaker market structure shift that creates a breaker block. This is a mitigation market structure shift that creates a mitigation block. Okay, and every time within the leg that market structure shifts, there will almost always be a fair value gap. Okay, and if there is not a fair value gap in this leg, and there is not a breaker block or a mitigation block, that is when we will drop down one time frame, not using our time frame alignment, but let's say that we're on the 5 minute for entry, right? And we don't have any, so we're going to drop from our entry time frame. Okay, this is always on the entry time frame, almost always on the entry time frame. We're going to drop from the 5 minute to the 1 minute, okay, to look for the fair value gap within that leg. Okay, or let's say that we're using the 15 minute for our entry and there's no fair value gap, there's no blocks, we're going to drop to the 5 minute. Okay, not time frame alignment where we go from 4 hour 15 minute to 1 minute, or daily to 1 hour to 5 minute. Nope, it's just going to literally be from 4 hour to 1 hour, or from 1 hour to 15 minute, or 15 minute to 5 minute. And within that same market structure shift leg, that is when, if you drop the time frame, like right here for example, if there is no block, if there is no fair value gaps on the 5 minute, but you drop to the 1 minute time frame, I can almost always guarantee you will find a fair value gap in here. Okay, now sometimes there will be more than one fair value gap. Okay, you want to take your entry off of the first initial fair value gap that gets touched. So example, if there's two of them, like right here, you want to take your entry off of this first one, and you want to put your stops deep enough to, just in case price wants to come all the way down for that second one, you won't get stopped out. Okay, if it gives that chance to go deeper, you want to make sure your stops are deeper, just in case, bro. Okay, but we take our initial entry off of this one. Okay, so right here for example, this here, we have the market structure shifted, closed above right here. We look back through, are there any fair value gaps? One right here. Boom, boom, and price taps straight into it and then takes the fuck off, never comes back to it again. Now if we would have entered here, boom, stop loss would have went below the wick right here, went below that low, because if price takes out that low, bro, we don't want to be in this trade. It's going against us. All of this tells us that it's reversing, right? And from here we could target the previous candle's high. Okay, and the previous candle's high on this specific trade, if I'm not mistaken, would be up here. So this would be our take profit, and if we went back down, that position, we'd hit 47 pips of profit, and this position is a 1 to nearly 12R, 1 to 11.5 risk to reward ratio, bro. So to put this into perspective, if you would have risked $100 on this trade, you could have made nearly $1,200, $1,200 off of $100 that you could have just made right here. Okay, this is an example of the market structure shift. I hope you truly understand it, bro. The key is that 3 candle wick swing high or that 3 candle wick swing low. And you can see right here, this last up close candle before the down move, this is that breaker block right here. You can see that it hold, let's see, from here to here, it somewhat held. It got barely closed below, but then it got closed back within, and you can see that that breaker block would have technically held. Now We could have entered on that breaker block right here. So as soon as this black candle right here tapped into the breaker block, that would have been our entry right there. Stop loss, we always put it below this low that sent the market structure shift, okay? We always put it below the low that sent the market structure shift. And we wouldn't have even got stopped out here. Price just came back to tap into that fair value gap, and we would have sent off. And on this one, it would have been a smaller risk to reward ratio, a 1 to 4R. So to put it into perspective, you would have risked 100 bucks to make $460, 4.6, okay? To give you perspective there. But that is the mitigation and the breaker market structure shifts, okay? Look for the fair value gaps. If there are no fair value gaps on the time frame you're on, drop one time frame. If there's a block, utilize the block, okay? The breaker block or the mitigation block. And again, it's the last, if it's if it's going to be a bullish market structure shift, it's the last up close candle before that down move. If it's a bearish one, then it's the last down close candle before the up move, okay? Remember that. Keep that in mind, all right? Now, we're almost finished here, y'all. Sessions to trade, okay? So there are different sessions to trade in the markets. London session starts from 3 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. New York session starts at 8 a.m. Eastern Standard Time to 5 p.m. Eastern Standard Time, okay? Asian session starts at 7 p.m. Eastern Standard Time to 4 a.m. Eastern Standard Time, okay? And then with that being said, there are kill zones. Kill zones are specifically when you want to look for trades. This is where like 85% of the time our setups form. Truthfully, if you have a setup outside of a kill zone, but it's within the London or New York sessions, I don't give a fuck. Take it, bro. I'm with that shit. But kill zones, London kill zone is 2 a.m. to 5 a.m. Eastern Standard Time, and then New York kill zone is 7 a.m. to 10 a.m. Eastern Standard Time. An example of when you'll be trading outside of the kill zones is like if you're trading a 4-hour candle and you're trading the 5 a.m. candle. So the 5 a.m. candle itself, it's outside of both the London kill zone and the New York kill zone, but it's happening during the London session. So there's still volatility happening, but it's just not within the kill zone. ICT himself deems kill zones as times for like to look for entries, but if you're trading the 5-hour candle, if you're trading the 5 a.m. 4-hour candle, then you would be trading outside of the kill zones, and oftentimes that 5 a.m. 4-hour candle gives you a fucking phenomenal move, bro. I've seen it happen so many times. All right, so with that being said, we know pretty much all of our concepts. We know our times. We know how to work nearly everything here, bro. You guys should know how to understand this shit at this point. And if you don't, comment down below where you're lost at. Where is your confusion? What do you have questions on, bro? Comment down below and let me know so I can answer those for you. Now, putting all of these concepts together to form an edge, okay? So you're always going to begin on your higher time frame, right? Let me look at like a different pair. Let's look at AUD USD, for example. You're always going to start on the higher time frame, okay? It doesn't matter which time frame you choose. It can be daily, it could be weekly, it could be monthly, it could be 4-hour. Personally, I like to trade a lot, so I like to go with the 4-hour. I love the 4-hour. I think the 4-hour is great, okay? That being said, man, that's actually pretty ugly. We want to look for something that's been kind of somewhat trending, kind of. Whatever, we'll just go with that. Anyways, so we're going to begin on the higher time frame. We're going to implement market structure on the candles themselves and internal range liquidity to external range liquidity, okay? And with that, this is going to give us the draw on liquidity, the next draw on liquidity, aka our bias and direction, okay? So, for example, right over here, you can see the candles are going down. This is all like a consolidation, so I'm going to disregard this area. We're going to talk more about this area right here, okay? So you can see price went from this internal range liquidity right here, the fair value gap, it tapped into the internal range liquidity and expanded to what? The external range liquidity right here. Okay, so let's say after this candle, once this candle wicked this high, closed within the range, respecting an internal range liquidity bearish fair value gap, there's so much telling me that this is going to go bearish. Again, we're in hindsight. Yes, I know, bro, but truthfully, it does not matter. If you understand this, you will be able to catch these in real time and you will be able to predict the very next candle. So knowing this right here, it wicked above, it closed within the range, and it closed bearish, a bearish candle with some volume. Knowing this, my idea as well, since we just reacted off of an bearish fair value gap, is we are going to target this previous candle's low and external range liquidity. So my idea is that this next candle is going to be an open high for me to enter on, low to target, and then close. Okay, so with that being said, now I'm going to go from my 4-hour higher time frame, I'm going to drop to my 15-minute intermediate time frame. Okay, on this time frame, what are we looking for? We are looking for our candles to open. So wait a minute, I apologize, I missed a step right here. Okay, so one thing also you want to make sure, so this candle is happening at 13. Okay, so this candle opens at 13, which is 1 p.m. Eastern Standard Time. Okay, this is going to be outside of the New York kill zone. Okay, this is an example of trading outside of the kill zone, but it's still happening during the New York session. Okay, so you want to know what time you're trading. Make sure you're trading within either London or New York session only. Okay, I will never ever recommend trading Asian sessions. Some people do it, some people have success, never knocking you, but this right here is going to be at 1 p.m. Eastern Standard Time. So whenever we drop to our 15-minute time frame, we know that we're trading in the New York session. We know what time the candle opens at. So the candle is opening at 1 p.m., which is going to be right here. Boom. So the candle opened right here. You see that? And it opened, it created the high. What did it create a high into? An internal range liquidity fair value gap, bro. It opened, created the high into the fair value gap. So this is the manipulation right here. So accumulation, manipulation. It didn't manipulate above liquidity here, but internal range liquidity, again, keyword liquidity. It's a form of liquidity. It gives opportunity for fairness in the market for sellers and buyers. Here it's giving equal opportunity for sellers to get into the market like us. Okay, so as soon as price opens, taps into that fair value gap, this fair value gap is my point of interest. This is the moment I drop to that lower time frame, 1 minute time frame. And this is where I am going to look for the market structure shift. Boom. So right here, we're looking at it, right? So here, this is where it opens at 13 right here. It opens, it expands up, and you can see it even took out this liquidity here on the lower time frame. So anybody who is selling here, put their stop losses above here, all of them got wiped the fuck out. Okay, and you can see right here, within this leg, look for the 3 candle wick swing ho, no, look for the 3 candle wick swing low. Okay, but the most recent one, and we can see that this one right here is the most recent one. Okay, you can see that price closed below it. There's no fair value gaps, but the last up close candle before the down move, this is your breaker block. Okay, it's not a mitigation because this isn't a failure leg technically, because it took out the liquidity over here. This is going to be your breaker block right here. Now let's say that we took entry off of it right there. Obviously, from hindsight, we would have got fucked. Okay, we would have got our stop loss ran out, and we would have lost this position. And that's okay, bro, because losses, they do happen in these in these markets. They happen very often. We have a risk management strategy and plan set to prevent long-term losses and to actually create longevity on our account. So long term, our wins are going to be way bigger than our losses, and our wins are going to outrun our losses in the long term, if that makes sense. Okay, so right here you can see that it actually gave another liquidity grab. It actually liquidity grabbed right here. We got stopped out, we got fucked. That's totally a-okay. So now we're resetting. We're like, well, our bias is still true, everything is still correct. We just took one small loss. You can set a rule for yourself, like, oh, one loss a day, I'm good. You can set a rule for yourself, like 3 strikes and I'm out, 3 losses a day, I'm done, calling it a day. It's totally up to you. But with this one here, you can see it ran out more liquidity. In this leg here, where's the most recent 3 candle wick swing low? It's going to be right here. Let me delete this now that we know that that's lost. You can see it's right here, okay? This is the most recent 3 candle wick swing low right there, okay? After it runs it out, price closes below it right here with this. Our eyes immediately go, where is there a fair value gap? There isn't. But here is the last down close before the up move. Here's your breaker block. Breaker block is right here, the last down close candle before the up move. I think I was just calling this blue candle the breaker block. Disregard that, bro. That was false. This is actually the order block. I'm still trying to untrain my mind from that change in the state of delivery bullshit. That shit is terrible, bro. Don't fucking fall for it. Anyways, the last down close before the up move that ran out liquidity and then market structure shifted. This last down close is your breaker block. Now, again, if this high would have failed to take out this high, if it stopped like right here and then market structure shifted, this would have been a mitigation block, okay? But knowing that now, once this candle closes below, market structure shifts, validates the breaker block. As soon as this teal candle taps into it, I am entering a short position. Boom. My stop loss is going above the high that just sent the market structure shift. And my targets are always, always, always going to be the previous candle low or the external range liquidity, okay? So again, where's that previous candle's low at? It's going to be this one right here, where this black line is, okay? So back down. We got 2 of them there. One is the external range liquidity, and one is the actual candle. So this one right here is the legit candle. So this one right here, if we would have hit it, that would have been a 1 to 4 R. We risk $100 to make $400. But if we're targeting external range liquidity, which is the next one, that's a 1 to 7 R. Risk $100 to make $700, okay? This is an example of the 4 hour to the 15 minute to the 1 minute. This is the model, dude. This is the edge, bro. We are trading the next candle's open high or open low. We're trading. We're catching the fucking wicks, dude. Notice how I didn't even really use SMT there either, bro. I didn't have to, but if I wanted to, I could have incorporated it, bro. SMT is just extra conviction for you. You don't have to use it. Truthfully, you want to keep your trading as simple as possible, bro. If you don't want to use SMT, don't. But I'm telling you, that motherfucker is like a golden nugget. That shit will tremendously skyrocket your win rate, okay? Let's see if I can find another example. EuroCAD. Let's do it on like the weekly time frame, for example. Okay, so let's say with this one, right? See how it wicked below it, closed within the range, and then this next candle closed above it. After this candle closes, my idea is we're bullish and we're targeting external range liquidity. Okay, that's my idea here. So once this candle opens, I'm anticipating an open, low, and I want to get in on the low, to expand the high, okay? So now we're going to drop from the weekly because we know our bias, we know our direction, we know what we're going to be looking for. We are going to be a buyer in this market. We're going to drop from the weekly to the 4 hour, okay? Before we do that, I'm so sorry. It was from this candle, it was July 1st. This one was July 8th is whenever it opened. So we're going to drop to the 4 hour. Okay, so right here. So it opens up right here on the Sunday. Friday, Sunday, right here at 17. This is where that next weekly candle opens. This is the new weekly candle open. And you can see it was accumulating and then it manipulated lower. This is the area where we would want to look for entry at. What are we looking for? We're looking for a turtle soup and we're looking for internal range liquidity on the intermediate term time frame. So we see a turtle soup happens right here and we see fair value gap right here. Internal range liquidity gets respected, right? As soon as this black candle taps into the fair value gap and it runs out the liquidity, I'm dropping to my lower time frame for that entry, okay? Now it taps in right here. What time are we trading at? Well, you can see down below it's 11 a.m. Eastern Standard Time. We are in the New York session right now, okay? So we're trading around New York Eastern Standard Time in the morning around 11 a.m., okay? So right here, you can see this leg expanded lower. Within this leg, where's the most recent 3 candle wick swing high? It's right here. You see that? 3 candle wick swing high happens right here. Boom. This candle barely closed above it, but that closure is a closure. Okay? So it closed above, it shifted market structure. Immediately, your eye has to go through this leg here and look for the fair value gap. Is there a fair value gap? Do you see one? Do you see a fair value gap in this leg right here? Yes, there is a fair value gap right here, okay? Now, I am taking an entry as soon as price taps that fair value gap. My stop loss is right below the leg that sent the market structure shift. And here's another example of us making a decent 1 to 4R. And then price wants to come back down one more time. This time it happens in the afternoon. This is actually the next day. So the next day it comes back down one more time. And this is New York, 11 a.m. again. So same situation. On the day before, we just hit a 1 to 4R. Okay? Me personally, I always have fixed targets at a 1 to 2R. I never target more than a 1 to 2, bro. Ever. Ever. But these setups, they do hit more than a 1 to 2. But I am just so content with the 1 to 2, bro. You can make a handsome living off of a 1 to 2R. And honestly, it's quick in and out. If I went for a 1 to 2, I would have been done with this position right here on this candle. You know what I mean? So this example again. So right here, it came down, liquidity grabbed. At this moment, we're inside of our fair value gap as well. We're looking for the most recent 3 candle wick swing high, which is right here, right? 3 candle wick swing high right here. And then right here, it consolidated. It didn't look like it tried to come back down, so it didn't create a mitigation, right? It didn't create a mitigation block. Instead, it broke higher. And this teal candle closed above here. Market structure shifted there. At that very moment, my eye is going from this candle through that leg. Is there any fair value gaps there? Yes. There's actually 2 of them. From here, and then also right here. There's 2 fair value gaps, okay? As soon as price taps into this one right here, I am entering. That is my entry right there, okay? I am going long Again, that's another word for buy. My stop loss is going below here, the origin that sent the market structure shift. Okay, I'd have about 9.5 pips stop loss. Oh wow, we've drained our battery this whole time. I'm gonna have to grab the charger for us. But you can see here, if we targeted that high, that next candle, it would have been a 1 to 4 R. This is the model, bro. This is putting it all together, bro. Like, if you truly, in all truthfulness, bro, if you study the hell out of this video and you actually go and practice those setups for yourself, you really will fucking transform the hell out of your trading, dude. This is advanced trading, bro. This is an advanced way to look at these markets, bro. The only thing you're missing right now, because you now have a model that gives you an edge on the market and that can be applied to any candle that opens on any time frame. It's applicable because it's all fractal, bro. And you can take it and you can use it in indices, crypto, futures. It has a different application, but it's the same technicals and same approach, bro. Okay? So, like, with all of that being said, one thing I forgot to mention is whenever I'm waiting for it to tap in for my entry, at those very moments, I'm actually calculating my stop loss. And we have to know how many pips our stop loss is going to be. I'm actually calculating my lot size. I'm so sorry. We have to know how many pips our stop loss is going to be. So this one's about 9.5 pips is our stop loss, okay? And we need to calculate our lot size accordingly to our risk management, okay? And then once we have our lot size, then we can have it ready and wait for price to tap into the block or the fair value gap. Then we can manually enter, or you can also set like a buy limit or a sell limit, and that's pretty much whenever price taps into that area, it'll trigger you in without you having to manually do it yourself. And then, like I mentioned, targets, I always use a fixed risk to reward 1 to 2, nothing more, nothing less. I never get greedy. I've learned so many lessons from being greedy throughout my years of trading. So you're going to learn them yourselves, but once I hit a 1 to 2R, I'm taking full profits, and that's specific to you. That's whatever you want to do with your own trading business, okay? But now you have a model that gives you an edge on the market, and that can be applied to any candle that opens on any time frame. Like I mentioned, it's all fractal. Now, risk management, okay? This is so we're not losing all our money, okay? You will risk 1 to 2% of your account balance, never more. If you ever do more, you're gambling risk, you're not managing risk, okay? An example, if you have a $100,000 balance, 1% is $1,000 risk. $10,000 balance, 1% is $100 risk. The bigger your balance, the more opportunity you have to make a lot of money, okay? Whatever you risk, this is a rule. Whatever you risk, if you lose your next trade, cut your risk in half and keep that same risk size until you make back your loss. So an example, if your initial risk was 1% and you lost that trade, then on your next trade, you want to risk 0.5%. And if you lose that trade again, then your next trade, you're going to risk 0.25%, okay? Now, if you hit a 1 to 2R on that 0.25%, now you made your 0.5% back. Your next trade, you can go back to 0.5% risk. If you win that trade again on a 1 to 2R, now you've made back your 1%. Now you can up your risk back to 1% on your next trade, okay? This is how you will prevent your account from bleeding and how you can keep your emotions from hurting and also how you keep your account alive for longevity, okay? Now, how do you calculate your lot size for Forex, okay? There's a mathematical approach to it. You can have that mathematical approach. It's going to be in the document, in the link in the description of this video. I'm not going to explain it. You're going to get brain fucked. Another way you can calculate your lot size you can go to Forex lot size calculator websites. Just Google them, and it'll ask you to put in like how many pips, what's the price, things like that, what pair are you trading, and it'll give you a lot size for you to put in whenever you're ready to enter your trade. Okay? Now that we have our edge, we have a risk management plan. How can we get capital, bro? Because you need money to make money, right? Unless you have $5,000 or more that you're comfortable with trading, keep in mind you will lose money. But we use our risk management to combat the losses and keep the account alive. Remember, our wins are going to be a lot bigger than our losses, and long term, our wins will outrun our losses, okay? If you don't have the option to have 5,000 or more, and you're not okay with putting your money up like that, then what I personally recommend is getting funded. Okay, I'm still not funded. I truthfully haven't prioritized it lately as much as I've been prioritizing learning and preparing to shift back to YouTube and then getting my priorities back to getting funded. However, getting funded essentially you purchase a challenge with a prop firm. A popular one right now is Funding Pips, and the price of the challenge is specific to the account size that you want to manage. Okay? The challenge will analyze your trading skills. There are objectives that you have to complete, and there's often two phases of the challenge. But upon completion of both phases, they will fund you sometimes over $1 million in capital. And you'll have a profit split of like 70 to 30, where you keep 70% and they take 30%. Some prop firms do 90-10 splits, bro. But just to put that into perspective, 1% of $1 million is $10,000. If you made just 2% on your account every month, you would make $20,000 every month. And after you're split with the firm, you'd be taking home $14,000 every month, bro. You'd be making $168,000 per year. Now, if you want to be a badass and run it up every month, you totally can. Truthfully, working from home for just a couple of hours, you totally can run it up, and you can make a lot more than doctors, bro. It's honestly crazy. The opportunities are endless here. It's really awesome. And then, like me, what you can do, you can reinvest that money how you'd like. Like me personally, I'm gonna be building a real estate rental portfolio. I'm also investing in stocks, ETFs, cryptos, meme coins, things like that. I also read somewhere that $10 million in dividend paying stocks will actually pay you $10,000 per month in dividends. That could actually be more these days, but that's all you need to live well, bro. You wouldn't even have to do nothing, dog. Passive income, bro. Reinvest. This is not financial advice, but I truly wish someone had taught me this shit, bro. I had to learn all of this on my own, dog. Here I am giving you this game, bro. Here you go. But there you have it. You know how to read price, and you now have a model that grants you an edge on the Forex market. You understand risk management. You know where to get capital. The only thing you need to learn on your own is psychology. When money is being made or lost in easy ways, your emotions and ways of thinking, they change, bro. They truly do. You need to identify every emotion you feel when you lose and even when you win. And you need to journal those emotions. Journal if you lose a lot and how you feel before, during, and after. You really will learn a lot about yourself, bro. You'll learn that you may be greedy if you're always itching for more, holding longer than a 1 to 2 R, over trading. You'll learn that you may be a gambler if you're risking more than 1 to 2%, or placing trades outside of the edge and setup we went over throughout this video. You literally should not be trading unless you follow the steps we went over to get to the trade. You'll learn that you may be egotistical, an anxious person, an emotional person. You truly will learn a lot about yourself because this is money, and real money, and a lot of money that we are managing, bro. You need to become emotionless. You need to treat this as a business. Log every trade and transaction that you make, every outcome, every gain, every loss, every emotion. You need to treat this as if someone is in charge of you, and if you fuck up, break the rules, or do anything outside of what you've been taught, that you will be fired and never be able to do this again. This is your business, bro. Now all you have to do is go and grow it. I'll post more videos upon this model, my trades, all of that cool stuff. Comment if you were lost on any concept and have any questions. Subscribe if you liked the video, and actually like the video, please, and subscribe for more. However, we are not finished just yet, my friends and family. Holy smokes, this video is a long one, I know it, but let's talk about Solana meme coins, bro. If you're still watching this video, you're obviously here to make money. I mean, we're all here to make money, bro. This is life changing. And if you take advantage and develop this as a skill, right now is the perfect time to get into this space. The market for this is growing exponentially, bro. 16-year-olds are turning $200 into 20 racks, even more sometimes. And it is completely possible. We are trading meme coins. Bro, I'm literally holding a meme coin called Kieth. I'm invested in an invisible cat. This fucking cat is invisible. I don't even know what it looks like, bro. What the fuck? Bro, a meme coin is a joke in the form of a non-utility cryptocurrency. They go crazy, dude, and have potential to make us money the way they do because there are people like us that are trying to make money trading them, okay? Always remember, we are trading memes. We are literally trading jokes, bro. We trade them using Solana. And the reason why is because the fees for Solana are cheap and it has a lot of attention right now. And where attention goes, money follows, bro. Solana is where the degens truly live, honestly. And celebrities release coins, and a lot of money pulls into them because they garner attention so easily. So that's how we can make money off of these jokes. We have to find where the attention is at. Now, understand you have to trade with what you're willing to lose. Get the idea that all of these coins, they will go to zero, bro. It's truly not normal trading. This is not Wall Street. This is the Solana trenches, bro. We are all here for money. So understand, people are going to be coming for your money, bro. There are tons of scams and rugs because there isn't a regulation on it yet. So we have to navigate through those. I'll show you how to navigate through them so your win rate and returns stay up. The name of the game is pretty much buying before other people buy. And when they buy after you, you're making more money, okay? And in this game, making money is just as important as not losing money. Now understand, in meme coins, we are trading human psychology, human behavior, predictive actions, okay? Technical analysis, everything we went over in this video for Forex, it does not work here. This is gambling, bro, but it's educated gambling with an edge, okay? We do have a strategy. So again, never trade with more than you're willing to lose, okay? Some basic terminology, um, Jeter, rug pull, rugger, FUD, CTO, all of this stuff, bro, is going to be in the document. Go to the description below, get the document, and learn the basic terminology. I don't want to bore you. I don't want to make this video longer than it already is. There's some basic terms in there that you want to know because you'll see the whole community talking about it a lot. So we're going to jump straight into tools. So the tools that you're going to want to use is going to be first phantom.app. So phantom.app. Phantom.app right here, you're going to download for Chrome. You're going to download it. It's going to end up becoming like a little extension up here for you. But this is your main wallet. So when you buy Solana or you make profit on Solana, etc., you can keep the majority of your holdings in your Phantom wallet. Think of it like your savings account. But instead of in your currency, like in my currency is dollars, instead of like a savings account of dollars, it's in cryptocurrency. And it changes with the market. So if you have Solana in your wallet and Solana goes up, your wallet is profiting on Solana, okay? So you want to go to phantom.app. Do not go to anything else. Phantom.app, okay? Create a Phantom wallet. When you do, you'll get a private key and a 24 word phrase, okay? You need to keep both written down on paper and stashed away somewhere that you will never lose it. And you never want to share this with anyone ever, okay? You can load your Phantom wallet with options available on the app. So they have like MoonPay where you could just set up a debit card, or you can like use Coinbase or like Binance or like different apps to purchase crypto, and then you could send the crypto over to your Phantom wallet. Personally though, I like just using the Phantom app. You can use your debit card and it's really quick and easy with really low fees. It's awesome. Um, but after you have your wallet set up, after you've purchased some Solana, you have some Solana in your wallet, you're gonna pick your DEX. Okay, a DEX is a decentralized exchange. And us, we use DEX Screener and Bullex. Okay, so DEX Screener, it's gonna be dexscreener.com. Okay, Bullex is another platform that we're also going to use, but we'll use Dex Screener for research, and then Bullex we're going to use for deeper research and to trade on, okay? And you will need Bullex, okay? You really will need Bullex. You can't. This shit is honestly without Bullex. I just recommend don't trade meme coins unless you have Bullex. But unfortunately, you can't access it by just looking it up. So if you go to like bullex.io, I'm already logged in, so it's going to pull up my account. But whenever you bring it up, it's going to have like to log in or something like that. And then it's going to take you to Telegram. Okay? Telegram is an app where pretty much it's like a Telegram bot. And with that being said, you can look it up, but you can't access it. Believe me, you can try it. You can search bullex.io, and whenever you try to access it, you'll be placed on a waiting list with over hundreds of thousands of others waiting to get access to this platform, okay? I was able to get early access. I am going to give you all early access. To get early access with a 10% discount off all trading fees, click the link in my description of this video, bro. I'm going to leave a link for you all so that way you can have access to this platform yourself, okay? With that being said, Bullex, it's the number one trading platform in the Solana meme coin space. It's front running every other platform, even doing different updates to make the platform better. So truly go check it out. And then if you try to get access and you're on the waiting list, just copy the link that I have in the description and paste it into the Telegram bot and it'll give you access, okay? So I'm going to demonstrate real quick Dex Screener. We're going to go through a little tutorial and how we work it. So we always use new pairs here on the left, okay? Token is going to always be the name of the meme coin. Price is the price, but we never really look at that truly. I'll tell you what we do. Age is when the token was launched, how old it is, okay? Buys and sells aren't important because these all could be done by the same person, and people also use transaction bots to make their coin trend. So buys and sells are self-explanatory, but we don't really look at them, disregard that. Volume, this is important. That's how much money was bought and sold combined for the duration of time the coin's been released, if that makes sense. Okay? Makers are unique wallets that bought or sold. Keep in mind, one person can have more than one wallet. Essentially, this is every wallet that was a holder of this coin, okay? 5M, 1H, 6H, 24 hour. These are all time scales. This is the percent change on the meme coin. Red is down, green is up. So you can see Arky Satoshi's dog in the last 5 minutes has a 42% gain, positive, okay? And then in the last hour it has a negative 6% loss, okay? Give you an idea right there. But liquidity, the easiest way to understand is the lower the numbers, say 10,000, say the liquidity is 10,000 and you put $5,000 into the coin, you're going to have a huge effect on the coin's price. the chart is going to go all over the place because you entered in, right? Versus if the number says like 150,000 liquidity and you put $5,000 in, you're going to have a way smaller effect on price. So that's an easy way to look at liquidity, okay? MCAP is what we look at instead of price, okay? MCAP is market cap, okay? It's, if I'm not mistaken, it's the amount of coins multiplied by the price, but that's what we use all the time. I'll pretty much show you, okay? So this is Deck Screener, Bullex, okay? Whenever you get it set up. Bullex is a platform that we use to do extra research alongside Deck Screener, as well as we use it to place our trades, okay? So up here on the first tab, we have Chains. Chains is our first option on the left tab. Here, we will only select Solana, okay? All these other ones, you could definitely get rid of them, hide them, and then just click Start Trading, so that way you're only focused on Solana pairs only, okay? Next, second option on the left tab, we're hardly in here. This is going to be new pairs. 95% of these are going to be scams, bro. So I hardly ever, I'm really never in here, okay, truthfully. Third option is going to be Pump Vision. This is where we see new creations get created. About to graduate are coins that are about to hit Radium. So when coins are initially released, they're exclusively released on Pump.Fun or Moonshot, which are exclusive platforms, okay? And until they hit a certain end cap, a certain set M cap, which varies amongst coins, okay? So they're released exclusively until they reach a certain set M cap, which varies amongst coins, but once they hit that market cap, they will hit what they call Radium, okay? Once they hit Radium, they go from about to graduate to graduated. See how they're migrating right now? These coins have hit Radium. So they'll migrate from Pump.Fun or Moonshot, which are the two exclusive platforms. They'll migrate from those platforms to Radium. And on Radium, that's whenever they go live for like non-exclusive. They're able to be traded by literally everyone and anyone, okay? Um, I'll give you a strategy for this one later in the video. Just keep watching. About to graduate is the strategy I'll give you for it. And then graduated are the coins that reached Radium. I'll also give you a strategy for this one later in the video, but fourth option down is going to be Token Explorer. This will show you trending coins, gainers, losers, and recents, and you can filter right here on the right their volume. You can filter market cap, type of different rug checks, and so on. We're also hardly in this section, but you can definitely explore yourself, Token Explorer. The next option down is going to be automation. Automation here is where you will see your buy limit orders or sell limit, take profit, or stop loss orders. So if you set like a take profit, or if you take like a, if you set like a take profit, or see how I have a take profit up here, so I want to sell above this price up here. That's like a sell limit order, so this is a take profit. If I place it down here, that would be a sell limit order, that would be a stop loss, okay? We went over those in just a little bit earlier, but in automation is where you'll be able to see all of those, okay? Next, sixth option down is going to be portfolio analyzer, okay? Full transparency at the moment, I'm a fucking loser, bro. Holy cow, dog. But it's very momentary, okay? This will change, okay? We're gonna be making hella money here, all right? Here you can see your wins and losses, your trade history, your realized P&L, which is your total wallet profitability over time. Are you down or are you up? I'm obviously down, but I'm going to change that, bro. Truly, I was chucking bread away trying to learn this shit on my own, dog. Stupid to do, I know, but when you don't have mentors and you have to learn for yourself, those are the sacrifices you have to make in order to learn. So that's why I'm so down. I truly was just chucking bread away to learn this shit on my own, bro. But this number will go green real soon, okay? Unrealized P&L are your open active positions that you haven't closed yet. Okay, are you down or up? Truly, I have no idea though what total revenue or total spent is. Um, I've never spent nowhere near 8K here, and I've never received, if that's what it means by revenue, anything near 6K yet. So I don't know what those are, but you can also see your active positions to the right. These are like your active positions. These are what I'm currently sitting in right now. It shows my active P&L and all that cool stuff right here. A lot of the time, bro, I'm buying dips. A lot of these coins have went to zero, and I'm gonna explain little details about all that too. But um, to the right, you can also see your chain breakdown. So if you held other chains other than Solana, like if you did Ethereum or something else, you'll see all of that here as well. And then you could also flex if you won something. You could flex your winnings and stuff. You could flex your win. This was a pretty decent win on Illusion. I invested 109, made $60 profit. It's not too bad, not too shabby dabby. But you can do all of that cool stuff on this part, okay? 7 option on the left tab is your wallet manager, okay? Here you can create wallets, you can add money, withdraw money, distribute or consolidate your money. All that good stuff is here, okay? You can do all that right here. You can see your trade history. All that cool stuff is pretty sweet, all right? Um, you can see I'm fucking broke because I have all of my money in these. Anyways, all the way down here, you will see airdrop. So BullX airdrop, climb the leaderboard to win more BullX. So they have this like airdrop opportunity. You can see how it works and all that cool stuff. And I'm not gonna really explain this stuff, bro. You could explore it whenever you get access into the platform, okay? Then you have your own referral. So these right here are going to be whenever you refer someone to. So I'm referring you guys so that way you could get early access. Friends you refer get early access to BullX with a 10% fee discount. So y'all will get discounts, and then here it'll pretty much like keep track of like your level. So like whenever you guys trade certain volume or something, it's gonna keep track of all that. I truly don't know how this worked, bro. It says my earnings is 58 cents. I guess I earn money from this. I don't know, bro. Support your boy, I guess. I'm not even truthfully, bro. This referral link is for you guys to get access to this platform. I don't give a fuck if I'm making any money from it, dude. Like I want y'all to get access to this platform. This platform is gold, bro. And then you have the BullX Academy. This is where it'll teach you like making your first trade, adding funds, and all that cool stuff. You get tutorials on how to use this, and then settings, and then log out. These are all self-explanatory, okay? So that way you kind of know. But let me go ahead and see here. That's pretty much the BullX platform in a nutshell. I'm gonna open a coin from Graduated real quick so I could give you guys an example of a little bit more. Let's click on Josh. Look at Josh. He's just a little pup. He's just a puppy. So here, when you open a coin, you'll be presented with a chart, and it'll look a lot like TradingView, bro. Doesn't this look a little familiar, bro? It looks very familiar sometimes, dude. Well, not sometimes. It looks literally like TradingView. You could change your time down over here, change your time frame. You can use different tools over here, like we went over, like the trend lines and all of that stuff. But again, normal technical analysis doesn't work in these markets, bro. They truly don't, okay? Anyways, so it'll be familiar. Top of the chart, it's pretty self-explanatory. It has the name, it has the price, market cap, FDV, liquidity, all of this stuff. Right here, though, to the right, you'll see audit. Here is a little extra easy research that BullX does for us to assure us the coin isn't scammy, okay? So if we click right here, you want to see mintable? No. You want to see mutable? No. Freezable? No. If any of these say yes, stay away. This is a scam. Do not fuck with the coin if any of these say yes. They must always say no, okay? LP burn, you always want this to say either 98% to 100%. Nothing less, bro. If it says anything less than 98%, don't fuck with it. It's a scam. Stay away, bro. Okay? 100%. All right? Top 10 holders, it's going to be yellow, red if it's like over 15%. If it reaches 30%, it's going to go red. Truthfully, you want top 10 holders to be 30% or less. The lower they are, then the less the risk, okay? If that makes sense. Top 10 holders is just pretty much like the top 10 people with the most investment in this coin, okay? And if they hold, like, let's say if the top 10 holds 50% of the supply, bro, if the top 10 sold right then and there, let's say that it's at like 30, let's say it's at 40K right now, and 50% of them sold, it would drop the price all the way down to like 20K, maybe even less than that. It would fuck the whole chart, bro. So that's why you want this to be a lesser number, because the lesser the number, the less risky it is, okay? Then below the chart, you'll see orders, right? Orders are pretty much like buy and sell orders going in from different wallets. You can see people are placing like 0.29 Solana. You can see some people will place like a full Solana. Some people will get ballsy and drop like 30 Solana up in this bitch, bro. To own one Solana is like 185 bucks. So to drop 30, that's fucking nuts. They drop thousands of dollars. It's crazy. But um, same with trades. Trades will also be a little bit more of a breakdown of like the traders. And what's cool too is like if you're interested, you can always explore different traders' wallets, right? So whenever they place a trade, like these guys, they bought for a dollar, not a dollar, one Solana. So 1.19 Solana. If you wanted to, you could click on the little fishy next to their thing right here. So if we click on like the little fishy, see how there's little fishies next to these little numbers and stuff? If you click on the fishy, it's going to bring up SolScan, and this is that individual trader's wallet. So like for example, this one over here, this individual trader, their wallet, they currently have $168 in it. You can see that they hold different tokens. These are all the coins that they currently hold right now. You could view all of their holdings. And then you could even see balance changes. So you could look at their recent trades. You could see that they just bought Josh a minute ago. And you could see whenever they sell Josh, you could see if they make a profit or a loss. Like let's look for one where they sold and made like a profit or loss. So like Till. They bought some Till. They even bought more Till actually. So they doubled up on Till. And it doesn't look like they've sold Till yet. Let's see. Bob. They bought some Bob here. They bought more Bob here. Doesn't look like they've sold Bob. So this trader, they look like they buy and they hold. Look at this one right here. They bought Nero. So let's see right here. If we go back. So Nero right here. If we click the eye. So they bought $43 worth of Nero. Okay, $43 worth of Nero. And then let's see where they sold it. And they sold it right here. $43 worth, and they made $71. So they made profit off of Nero. So they bought $43 worth and sold $71 worth. So they made about $30 worth of profit on Nero. And you can explore different wallets, bro. You could even track wallets. So if you find a wallet that's pretty profitable and they trade meme coins and they're very good at it, you could track their wallet, and whenever they enter a trade, you can enter that same trade, bro, and you could like kind of follow along in a way. It's pretty crazy, the opportunity here, but I don't want to get off track, get off topic, get off script. But with that being said, holders is the individual wallets um, holding this coin. So these are all individual wallets holding the coin, and you can see how much each percent is holding. So this wallet right here, they hold 4% of this coin's value. This wallet here holds 3%. And again, you could click on the little shrimp, the fishies, the dolphins, and you could bring up their whole wallet, and you can see how much is in their wallet. You can see what they've been trading under balance changes. You can see all of that, bro. It's pretty freaking crazy, the capability here. But that's holders, okay? And then top traders, these rank P&Ls. So these are the traders who made the most money on this coin, okay? So they bought and sold, or all of that cool stuff. So you can see that this top trader here, he bought $925 worth and sold 1.96K and made $1,000 on this fucking coin, okay? Um, Positions, these are our personal positions. This is what we're currently in right now. This is how much we're invested in each of them, or not invested in each. This is how much we've invested in total. Okay, this is how much we were invested in total, and this is how much is remaining in that specific coin. Okay, so right now, like, I've invested total in Kiev. This is that invisible cat that I'm invested in. Total, I've invested 2.33 Solana. Right now, I have 1.7 Solana in there, and I'm currently profitable on the position at the moment, okay? Just to give you an idea of what positions is. And then history is if you took any trades on this specific coin, then it would be under your history right here, okay? And then to the right of your chart are going to be your buy and sell buttons, okay? So they're pretty self-explanatory. Market buy is buying at the current price. Market limit, you can set your buy a little lower below current price. So if it dips more, you get a cheaper price entered at for more potential gain. Amount is the amount that you're buying. Then you can simply press, like, for example, if we wanted to buy 0.01 of this token, then you would simply press buy right down here. Let's see. I do recommend changing your buy settings by clicking the gas icon right here. So, for small accounts, I've set priority fee and bribe to 0.0005, like mine right here. These are just the speed of your transactions versus others. So whoever pays higher bribe and priority fees, they get entered into the coin way quicker, which isn't a huge deal for our strategies. And then you want to keep MEV disabled as well. Always keep that disabled. I don't know what that is, but I learned literally no trader uses it. And slippage, I personally keep it to 15%. Okay, this is if we're entering at, let's say we're entering at 200K market cap, but it enters us at 240K market cap instead. That's negative slippage, and it happens when a lot of transactions are going into the coin. And personally, I'd rather keep a small slippage and not be entered in the coin than be entered way too high against me, if that makes sense. And you can change that to what you want, but I do 15%. Now, if you have a bigger account, want to be entered faster, or if you're trading like newest creations, I'd change bribe and priority fees to 0.005 or even 0.01. Whatever you set your buy settings to, you want to make sure that you set your sell settings to the exact same thing, bro, okay? If you don't set them to the same thing, it's going to fuck up your trading. I've seen it happen before. But then whenever you've set them up, you simply want to click the X little window right up here. That's going to exit that out for you there. And that is how you change your settings there. And then with sell, it's pretty much the same as buy. Just vice versa. You'd sell at market price or use the sell limit to set like a take profit or stop loss, like we've covered earlier in the video. And then you want to put like the total amount you want to sell, like 100 or something like that. I usually do like 85% to 100% that I'm selling. Then I'll press sell. Okay. Below you'll see advanced sell. We don't use that, but below that you'll see stats. This is the total transactions of like depending on the time that you're on. It'll tell you transactions. It'll tell you the total, either buys and sells, and that's specific to the time frame. Within the last 24 hours, it has 893 transactions, all that cool stuff. And then you can also see uh, volume. So this is the volume, both buys and selling volume. You can see depending on which time within the last hour, it has 143,000 volume. That's crazy. And then makers, these are the individual wallets that bought and sold. So there was individually 614 different wallets that bought and sold. And remember, keep in mind, it can be one person that holds multiple wallets, okay? So you can always change it by the times as well. And then checks, these are the same as audit up here. It just gives you a smaller portion of it. It literally only gives you LP burn and top 10 holders. I'd rather just look at audit up here. And then my position, this will tell you your total invested for all time stats. Okay, right here under invested, it'll tell you your all-time invested. P&L will tell you your all-time P&L. Remaining will tell you what you currently have in there. And then P&L percentage is like your all-time P&L percentage, and so on and so forth, okay? Um, Last cool thing I want to touch on is on top of the chart, you'll see bubble map. Bubble map is really cool. This is where each bubble represents a wallet from the top 20 holders. And the bigger the bubble, the more it's holding of the total supply. And when bubbles overlap, it represents blockchain transfers, signaling the same person owns both wallets. So when you click on overlapping bubbles, it will show you like the cluster percentage. And this means one person who owns these overlapping wallets owns this much of the supply. So now it can be a bad thing if there aren't that many holders or if it's a smaller market cap, because remember, like liquidity, they have a huge effect on price. So if they sell, they could dump the entire chart and make money off of all of us, bro. Because remember, everyone's here to make money, and we don't make money unless people buy in after us and we sell on their heads, okay? It's a bummer, but it is true. This bubble map doesn't look too bad. Let me go and try to find one to give you an example of what a shitty bubble map looks like. Like, let's say this one. Let's click on this one real quick. Bubble map. Bubble. What in the fucking hell is this shit, bro? This is what I mean, bro. I've never seen a bubble map like this. This is the biggest scam from hell, dude. What the fuck was that, bro? Top 10 holders. So whenever you see right here, dev, that's the developer. They're the owner of the coin. They're the one who launched the coin. You can see the developer is the top holder on this coin. He owns 10%, bro. And he could possibly even own and hold these ones right down here. These right here, top holders, see the little rat? That's an insider. Insiders are people who were like, they either got airdropped the coin before release or on the initial release, where they had early access to the coin and shit. And you don't want a lot of insiders. Those fuckers will all dump on your head too. But bubble map, this shit is nuts. I've never seen nothing like it, bro. Look at the cluster percentage is 99%, bro. Look at all the little bubbles within the bigger bubble. This means that there's wallets all transferring. So you can see like, yeah, bro, like there's one specific person transferring to all these different wallets, and these are the top 20 holders, bro. So right here is a perfect example of a scam coin. I would stay the actual fuck away, bro. That's horrible, dude. That's very terrible. That's bubble maps for you, bro. If you see, if you see coins like, and they have the bubble map like that, just stay away. Like, let's look for another one. These are all newer creations. Flog Dog. This fucker has 70 holders already. This fucker barely released, bro. The developer owns 5%. Look at the insiders. Snipers are also similar to insiders. These fuckers have to use a bot for whenever it releases. They get entered in immediately, bro, on like the first second. And look at all these insiders. Whenever you see a lot of holders right on like a minute of release, it's going to have tons of insiders. These insiders are like a community, and they were able to buy the token before it initially released, if that makes sense. And so they have the opportunity to buy it early, and if this token runs to like 100,000s, even like millions, they make a fuck ton of money, bro. like a lot of money. Remember how we were going over like a 1 to 2R, a 1 to 4R, shit like that? Imagine if you bought at 20K and it reached 100K. That's a 1 to 5R. Now imagine if you did 20K and it reached a million, bro. That's a 1 to 50R. If you risked $100, you would make $5,000, bro. And there are coins that go way beyond a million market cap, bro. That's what I mean by there are motherfuckers on here who will bet $100. That shit will fly to like over 100 million market cap, and these fuckers will make over a 100 and over 500x, bro. Risking $100, they're making 50 racks, bro. It's fucking nuts, dude. But with this one, if we go to bubble map, let's see it. All individual wallets, different holders. This is what you like to see. You know what I mean? This is a decent bubble map. This is what you like to see. The only thing that scares me off is how many fucking insiders there are. And then if we look at the audit check, 21% top holders. This all looks good. But look at, bro, 17, 18K. Look at that. They got all the way up to like 40K and then they dumped. Look at that. They're dumping, bro. Somebody in here is selling their supply, bro. The developer hasn't sold yet, because see how it says DB? If the developer sells, you'll see DS. Damn, bro, this shit just died. Imagine if we like bought in like right here right now at like 6K. The developer hasn't sold yet, bro. This isn't, although there's only 13 holders now. All the insiders. See what I mean, bro? We just witnessed it, dog. All the insiders, bro, just fucking sold this coin. They dumped on their developer, bro. Bro, but it's also possible that the developer himself airdropped hella to all the insiders, bro. All the insiders could have been the developer on different wallets. And look at, there's a developer. He just sold out. It's possible that the developer was the one who sold all those positions and made all that money and just rugged this whole coin. That was a rug pull for you guys, okay? This is why we don't trade new creations. They're like 95% of new creations. They do that, bro. Literally. Like if we clicked on Frosty, the polar bear. Look at this shit. It's already dumped. It pumped. It dumped. Look at now. It's wanting to pump again. I'm almost certain this shit's gonna end up dumping again, bro. Look at the developer already sold. The developer isn't even in this coin, bro. Or look, he is, but he only owns like 0.07% of this shit. He's barely holding any. But that's what I mean, bro. Like, that's the bubble map. Sorry, I kind of got off topic there for a second. Look at that shit, bro. New creations. Stay away from new creations. They will fuck you every time, dog. Alright? I chucked off a lot of bread in new creations just trying to understand not to fuck with them, bro. There's a lot of people that go crazy in new creations, though. I might make videos on what to look for in new creations, because I do know what to look for, bro, and I do know what to stay away from. These are just super risky, and you got to be very, very quick, bro. So I'll make a video on that in the future, but I want to kind of continue to move on. So check dex.xyz. So this is going to be another tool. Checkdex.xyz. You're going to want to favorite this, bookmark it, okay? So if we go to Dex Screener, if you notice on Dex Screener, if we go to like new pairs, go to like newest, go to Solana. So you'll notice, see how, look at Muichi has a little emblem. Flowstat has a little emblem. Edmundo has a little emblem. But look at Flow State, Augment, President Trump, Pepe Trump. These don't have emblems. Look at this one has a little emblem. Josh has a little emblem. See the little emblems versus no emblem? So when there's an emblem, there's oftentimes also a banner. So whenever we opened it up, you can see the banner right here. So the emblem will be up here and the banner will be right here. Okay? Those pop up if the developer of the coin paid Dex Screener to have a banner and an emblem, and they have to pay $300 to have that, okay? So you can check and see, because the reason why this is such a powerful tool is because sometimes it's blank, and that's only because it takes a while to update on deck screener. Sometimes there's a lot that are getting updated, and sometimes it takes a while, right? Well, there's a lot of people that will not buy a coin just because it doesn't have an emblem or a banner. That does not mean though that they haven't paid for it, okay? So you can like click on it. Let's say for example, up here is the name. Next to the name though, you'll see two pages. This is copy token address. Once you copy the address, you could come into checkdex and you could paste that address and see if it was paid for. It's not paid. Whenever it's not paid, it's more likely to be a scam or a rug pull or something like that. Versus whenever it's paid, it's more likely not to be. Reason why is because the developer will not pay for something that he's looking forward to scamming, bro. Like, what developer is gonna invest in a scam, bro? Why would they pay 300 bucks to scam and waste money? $300 specifically, bro. So whenever you see that it's paid, that gives more conviction, and it's a bigger green flag, like, oh shit, it's paid. This developer might be a little bit more serious about this coin, okay? So whenever, like, just because it's not, like, look at Red Pill now has it on. Bro, we were just looking at Red, weren't we? And it just said that it wasn't paid. We just looked at it, bro, and now it's paid, dude. Sometimes they take a little bit to update, bro. But we can always check and see if it's been paid or not before it has the emblem. And if it doesn't have the emblem but it says paid, you are then front running anyone who would not buy just because it doesn't have that emblem or banner. Okay? And by front running them, you're buying before them. So whenever they see that emblem and buy banner, they'll buy after you. And when they buy after you, price goes up and you make more money. So checkdex is such a golden nugget, bro. This shit is so underrated. It's a powerful ass tool, okay? So with all of that being said, how do you know what coin to buy? So inside of the document in the description, I have two other documents linked in that same document that's going to go to 4 different strategies for you. 2 of them are going to be on deck screener and 2 are going to be in pump vision, okay? Today I'm going to go over the pump vision strategies, okay? My pump vision strategies are actually fucking pretty great. There's a lot of people who make very good money off of pump vision strategies here. So on pump vision, we're going to be hunting under about to graduate, okay? Now, the key with trading meme coins is trading into volume, okay? Without volume, these coins don't move. And if these coins don't move, we can't make no money. So you need volume, okay? So search for coins with a lot of volume, a lot of 5M volume specifically. And then you want to ape into that shit with some good size. You oftentimes you don't want to wait for a dip. You can, but the reason why is because you can miss out on a lot of the volume and a lot of profit. And if you ape in with like good size, and what I mean by ape in, it means by literally just buying in. Okay, that's like a term for what they say in the Solana space. Aping in is just throwing money into a coin. It's just throwing money at it, aping in, okay? So if you ape in with like good size behind your position and claim initial profits quick as fuck and leave a moon bag, you can do really well. But you want to buy into like ones with like minimum 70 holders, newest release that have hype behind them versus old coins that don't, and that they're dying or are already dead. So with Pump Vision about to graduate, okay? The goal here is to buy into volume and ride it to radium. After radium, it'll likely have a small dip. You want to hold through it and you want to watch it fly to 3x, 4x gains, sometimes way more, okay? We seen one of the homies yesterday, he was live streaming and he caught something off of, well, it wasn't off of about to graduate. It migrated, went into graduated, and then he bought it and it went from like 120K market cap to over 20 million market cap all yesterday, bro. It was actually fucking insane to see. That shit was on FWOG, FWOG. It was pretty crazy. But right here, the filters that I use, I always only check pump fund tokens, only pump fund. Under holders, you want to do a minimum of 70. And then max age, token age, you want to do a max of 45 minutes. And you want to click apply, okay? What we're looking for here is look at RAR Kitty. RAR Kitty is migrating. What we're looking for is we're looking for a fuck ton of volume. We're looking for a fuck ton of holders that's getting close to the radium, right? So right here, Iwi the dog, for example. Iwi the dog, if we pop it open, it's at 97% bonding curve. So it's really close to hitting radium. So let's say that we just bought in right here, right? We just took a buy, for example. We didn't actually do it, but let's say that we just took a small buy right here, right? What we want to see is we want to see it hit radium. Once it hits radium, it's going to migrate. And whenever it migrates, we may see a dip, but we want to hold through the dip potentially, okay? We also want to look to take profits too. Let's look at the other one too that was migrating. So this one just finished migrating, RAR. Okay, so RAR just finished migrating, okay? So after the migration, we could potentially see it pull back just a tiny bit. And whenever it pulls back just a tiny bit, we could set like a buy limit order right here too. So if it pulls back a tiny bit into our buy limit, we'll get triggered in for an entry. So let's say we set it at like 72, okay? 73.72K. So let's see if it pulls back into that. While we're waiting for that, let's look at this one. Holy smokes, this one's getting smoked. This shit fucking happens, bro. It really truly does, dude. Whenever this happens, you can either close right away before it causes a deeper drawdown and you lose more money. You could close right away and wait for it to drop down, then you can re-enter. So you're not even really taking a loss. You're closing at break even, if anything. Or you could dollar cost average in. So say that we entered here and it dipped below lower. We can enter another position here to dollar cost average in, and it'll take our average position from here to like halfway between the two, depending on the sizes that we entered on both positions, okay? So like let's say that we're just looking at it, right? RAR hasn't came back down either. See that? We could have bought in and we wouldn't be missing out on that. This is currently a graduated token though. Just put that into perspective, okay? We're still waiting for this one to hit radium. GMS Gem Screener. This one has 19K volume, 18 minutes, 80 holders. It doesn't have much volume at all. We're looking for volume that's over at least like 65K. The more, the better. See how this one has the 134K? That's fucking phenomenal, bro. The issue with it is just it's just going down right now, dog. Like it still has 234 holders. You know, this top holder right here has $4,000 in this coin. So we still got some potential here with Iwi. Okay. So holy fuck, dude. Roar is going stupid, bro. If we would have entered off of like Radiant, bro. See, and sometimes that's exactly why I said earlier that like you sometimes don't want to wait for a dip because then you'll miss out on all the volume. We missed out on all the volume on this one right now, bro. If we would have entered in on this one, look at where's the measuring tool? From here to here, bro. That's nearly 100% gain. So if you risked 1 Solana, you'd be up 1 Solana right now. Plus your Solana. So if you claim profit, you'd win your Solana plus an extra Solana, dog. Like, just in this tiny little move, bro. In this small little move, bro. This is on the 1 minute chart, you guys. If we looked at like a fucking 30-minute chart, it's one fucking candle, bro. Like, bro. Just to put that shit into perspective, dog. It's fucking crazy, dude. Let's see how Iwi is doing. Iwi is just dying, bro. And that shit will happen, bro. So with risk management, I'm gonna go over your risk management approach to this shit, cause some coins will fucking die off, bro. And it's just, look at Adderall. Adderall 3 minutes already has 36K volume, 99 holders, 37,000 market cap. Let's open this bitch up. Let's see what Adderall's doing. Adderall 82%. Oh fuck. Let's just say if we bought into this one, right? Let's just say we aped into this hoe. We aped in right here. Fuck it. We just aped in. Okay? Just pretend, right? We didn't actually do it. Let's just pretend that we just aped in right now, okay? We want to see it reach that 100% bonding curve. That's whenever it reaches radium, okay? I want to see it reach radium. We're just waiting for it now. Let's see. Iwi died, bro. This homie who had 4Gs in there only has 400 bucks now. That's fucking sad. And see, that shit happens, bro. That's why you gotta go with the risk management approach. You don't want to just chuck off all your red, bro. This shit happens, dog. If we would have entered up here, we would have sadly been in such a fat loss. And that's why I said, too, personally, bro, because from experience, I've dealt with too many times where I've entered in and it literally done this and it goes straight to zero and now I'm fucked. Okay? Personally, bro, if it's dipping against me a little bit, because I'm personally trying to buy into volume. I'm trying to catch the volume. I'm trying to enter in when volume is entered and going bullish. If I enter in on that bullish volume and all of a sudden it starts dipping against me, I'm going to exit way before it even goes a quarter of this against me, bro. I'm exiting so quick to try to make my position break even as possible because this shit happens too often in the meme coin space, bro. Like, I truly want you to understand this, okay? Like I said earlier, get it in your head that all these coins will go to zero eventually, bro. There's literally only a certain few that will create some cult communities and they will run to millions and millions and millions of dollars, okay? But those are about 5% out of the 95%. Keith is one of those, right? So Keith is one that I'm currently entered in right here. Keith is an invisible cat. He's literally right there, bro. He's right there, bro. Like this is Keith. He's an invisible cat, bro. It's pretty funny, but um, so Pump Vision about to graduate, right? We already got fucked twice here, okay? Off of Adderall, and then off of fucking Iwi, bro. We got fucked twice already, bro. About to graduate is honestly a gamble, dog. Like, it truly is. And that's why you want to go at it with risk management, bro. Okay? So, about to graduate, I don't know if you even want to hunt in here, but this is where you'll be able to catch potential runners really early and you can catch them and send them to the moon. It's pretty phenomenal, bro. But this is one right here. There's another Roar Kitty that just got released. Another Roar Kitty, and this one's over here fucking making its way. This one just got released. Look at that. It has 30% of insiders, bro. 30% is held by insiders. That's fucking crazy. 49% is held by insiders on this one, but still, that's fucking nuts. Anyways, so yeah, the goal with about to graduate is buying into volume and riding it to radium. Okay, after radium, it'll likely have a small dip. If it don't have a dip like we seen with RAR, it can literally just take off, bro. Okay, so you want to hold it because if we bought in at radium right down here and it took the fuck off, we'd still be holding. We'd be up so much right now because radium, before radium, it's around like 68K. Right now, we would be up about 160% on our position if we bought it from about to graduate, rode it to radium, and then held it after that too. So that's the strategy with about to graduate. Okay, I'm sorry. It's a bummer that we couldn't catch something profitable, but it's honestly, it's hard to catch something profitable in a short period of time. You got to be staring at this specific screen for like hours sometimes, bro, before something legit pops up, okay? And it has to be a good meme too, cuz like we jumped into Adderall. Realistically, this isn't even a good meme, dog. This meme is honestly pretty garbage. It's Adderall, bro. Like, this isn't even a meme, bro. Like, you want to jump into memes, dude. And then Iwi, it's not even a meme, bro. Iwi's a fucking, like, I don't even know where Iwi went. Iwi disappeared. But Iwi's not even a meme, bro. Iwi's just like an animal, you know what I mean? And like, with me, dog, I'm trying my best to stay away from cats and dogs at this point too, cause cats and dogs, bro, they're all over the meme coin space, and truthfully, they're just remade bullshit, bro. And they always, like Sam right down here, Sam, I can guarantee you Sam's gonna end up going to zero. Like they hardly ever fucking hold, bro, unless there's something unique, like Kiev, an invisible fucking cat, bro. How unique is that, dog? Like, that's super unique. An invisible cat, like, you know what I mean? Rocky, this is another one that I hold that's sitting in the millions right now. This is literally a fucking rock, bro, named Rocky. Like, see how it's a little bit more unique, and then it has a website with it too, the cutest rock in the world and shit. Like, meet Rocky. Rocky is the cutest, most loyal rock I have ever had. He is always by my side and will never die. And then it gives you like boring stuff about Rocky and stuff. Like, bro, this is like legit coins are unique. Legit coins have websites, or legit coins have like a Telegram with group members and a following and shit like that. You know what I mean? But Rocky, I mean, I bought it at like 13 million, and it's been going down since. But it has 7,000 holders in this coin. The top holders hold nearly 250,000 in this coin. So, truthfully, bro, this is a coin that's potential to hit 100 million market cap. You know what I mean? And the fact that I'm in at 13 million market cap, it has the opportunity to potentially 5x or more my gains. You know what I mean? Same with Kiev. Same with like Selfie. This is a different type of dog coin. Selfie dog, it's a dog taking a selfie. And they make different memes, like he'll be wearing like the MAGA hat, or he'll be like he'll be doing different like memes and stuff too. But this is the same thing. It's at 21 million market cap, and it has a cult following, 7,000 holders, holding nearly $250,000. All of these holders right here. See? So there's different types. You want to, whenever you're exploring like Pump Vision, about to graduate, don't just jump into literally everything that has a good amount of volume, that has a good amount of holders. You want to jump into shit that's unique, bro. Slim Jack, the skinny W, that's kind of unique. You know what I mean? What the fuck is a Slim Jack, bro? Like, you know what I mean? If we click on like their website, meet Slim Jack, join the party, Slim Jack. Look at, they have a website and shit. It looks like they took time on their website, and that's what I'm gonna jump into as well here in a moment, okay? But Slim Jack, bro, if we opened it up, it's at 97% bonding curve. Let's just say that we like entered it right here, right? To write it to radium, and then see if it pushes past radium, okay? Let's see what that one. That's gonna be Pump Vision about to graduate, okay? That's what you're looking for under about to graduate. You're looking for unique shit. You're looking for hella volume. You're looking for it less than 45 minutes old. You're looking for like not too much holding, not too much insiders. This is honestly red flags, but you know, you're gonna, after time, looking at these and seeing what flies and what goes to zero, you'll kind of get your numbers in your head, like, okay, these numbers are the numbers I want to look for, right? Under graduated. So graduated, my filters, you're gonna put holders minimum of 260, okay? You're always only gonna have pump fund tokens only. And then age maximum is gonna be 8 hours. So 60, 120, 240, 480. So 480. is the minutes, maximum minutes that you want to have that at, and then click apply. Okay. Now here, what we are looking for is we want to look for coins that are on dips, okay, with a lot of holders. So if we pull up this one, for example, Pophead. Pophead is not on a dip. It's at a high point. We want to wait for a dip, okay? So if we go back, let's look. Binary dog, I'd stay away because it's a normal ass dog, bro. Nothing special, nothing unique. Rar kitty. It's a little unique. It's different, you know what I mean? Red pill. It's not really unique, you know what I mean? Flow state. This is a little different, you know what I mean? Flow state. And look at it, it's on a somewhat dip. See that? Came up and it's on a dip. Right now it has 900 holders in this motherfucker and it's at 120k market cap. In my opinion, this shit is slept on, bro. Dude, if we entered in right here and this shit grew even to break the all-time highs, bro, at 500k, dude, we make like 4x on our fucking, we'd make a 4x return, you know what I mean? What you're looking for on graduated, though, is under those filters, you're looking for something unique. And, like, look at all these dogs. Ace, Luke. Bro, Luke doesn't even have much market cap. He's at 16k. He's getting fucked. Ace has 688, but, I mean, still. 42% is held by the top 10. That's fucking crazy, dude. They'll fuck that chart. Shrigma. Shroom Jack. This is different as fuck. What is this? Shroom Jack, bro. This is fire. No wonder it's taking off, dude. It's at a high right now. It's already at 500k market cap. This is fire as hell, dude. It's tight. Anyways, that's what you're wanting to look for under graduated, bro. You're looking for shit that's on a dip. With meme coins, you want to buy dips when there's a lot of holders. Okay, and if it's already solidified itself as a legit meme like Keith, Rocky, and Selfie, and you can know that it solidified itself if it reaches those million market caps and it has hell holders behind it, those are solid memes, bro. Those are coins that have the potential to run to hundreds of millions, even billions, bro. There's this Billy on here. Billy. Bro, Billy itself released a month ago. 115 million market cap, bro. This shit is on a fire dip right now, bro. Bro, all time it hit 240 million market cap. And it started over here in like the 20 million market cap. And it fucking flew, dude. It flew. And like people predict that this shit will hit 1 billion market cap eventually. So like whenever it solidified itself like this has 27,000 holders, bro. People hold millions of dollars in this coin, bro. Dude, this is a solid meme, bro. This is where you just want to park money and just let it grow. You know what I mean? You just want to put money in here, some Solana. Because realistically, if you have Solana growing in the world from like $180 to $200 worth for one Solana, and then in here you're doubling, tripling, quadrupling your Solana, bro, you are like, that's like the S&P 500 on steroids, bro. Like you're literally, you have the S&P 500 index on steroids at your fingertips right here, bro. It's fucking crazy, dude. But those are my pump vision strategies. I'm gonna go over my deck screener filters and strategies real quick because I have such a solid one, and I want to go through like the strategy with my QuickBooks setups. Okay, so because I've caught some really nice winners on these ones, I've been successful with these ones in the past too. So the way that I usually go about these ones, watch, bro. Slim Jack took the fuck off. Oh my gosh, bro. Slim Jack is a G. See, this was one of those about to graduate that we just caught, bro. We bought in at 60K and it's already up to 160K, dog. You know? And again, we didn't actually legitimately bought it. We pretended to, okay? We're just giving examples. But this right here is currently up nearly 200% gain. So if we risked 2 Solana, we'd be up fucking 4 Solana. Plus our 2 Solana. So if we claim profit, we'd be profitable 6 Solana in total, bro. Slim Jack fucking flew, bro. Why did it fly? Because it was unique. Has a lot of holders. Has a lot of volume. All of those key deeds like add to a great performing meme coin, bro. So Slim Jack was a great example for you under about to graduate. Hopefully Flow can fly, and then you'll have another example of about to graduate. But deck screener, what I really wanted to kind of jump on is my gems and long-term growth, but also conservative, quick cheat kind of strategy. So like these long-term gems, um, it's this is how you can find like the Keith, the Selfie Dog, the Rockies, and this is how you find those coins with those solid communities that you could just park your money in and just watch it grow forever, okay? So you're gonna go to Deck Screener, click New Pairs here on the left, you're gonna click Newest here, and you're gonna go to Solana right here, okay? Now from here, you're gonna go to Filters, and you're gonna put Market Cap Minimum 1 million. Market cap maximum, you want to put 20 million. Okay. And then for 5-minute volume down here at the bottom, you're going to put 20,000. This means within the last 5 minutes, $20,000 worth of volume has moved in and out of these coins. Okay. So here you can see on the 5-minute, Chompy the Shark had a positive 11% gain in the last 5 minutes. If we pull him up, change it to market cap view, you can see just that. In the last 5 minutes, it's been growing from 1.11 million all the way up to 1.35 million in market cap. That right there, small little gain. It's a 17%, 20% gain nearly. So if you risk 1 Solana, you'd make 0.20 Solana, which, if I'm not mistaken, that's about like 35 to 40 bucks that you would make on this tiny little move within 5 minutes, bro. Like, just imagine that. But see, with this one, the market cap is 1.2 million. Okay. Has tons of holders in it, 657. They're holding thousands of dollars in it. This one right here, it's also on a dip. So whenever it's on a dip, oftentimes you want to buy dips. Whenever they're coins that have like a lot of holders, they're high in market cap, you want to trade them like a market structure shifts. Whenever they're trading down, like for example, if we go back and look for one that's negative, like Frosty the Polar. Oh, excuse me. Oh, look, Frosty is actually going up right now. These ones are new too. You want to look for something that's a little bit more aged, like Fwog. This was that one that I was telling you about, that fucking flu that homie caught. Look at this one though, Pufferfish. Pufferfish released a couple of days ago. Look at how unique this one is, bro. Pufferfish. It's a fucking fish and a dog mixed, bro. That is unique as fuck, dude. That's why they get hella people that hold them and shit, bro. It's a unique ass coin compared to these bullshit fucking new ass coins that get released. It's all bullshit, bro. But you can see with this one too, it's on a dip. Its all-time highs reached about 5.30 million, right? And right now it's at 1.7 million. So what I personally do is I buy the dip. I will buy the dip, see how it was trading lower, creating these lower lows and lower highs, and then market structure shifted just now. So if we look at like the 15-minute, you see how market structure shifted? See how it's going down, and then this big candle market structure shifted. Yeah, we could look at the 3 candle wick swing highs, but they don't really, that on this platform they don't mean nothing, bro, truthfully. But this big movement up, that changes the direction, okay? So whenever this happens and this dip happens, this is whenever I'm looking to buy the coin. So I would buy in right here, and I'm targeting those previous highs. So this would be like a good 3x gain, you know what I mean? Look at this person just dropped 2 soul up in here. So if it's nearly, this person just dropped 5 soul in here. So like if they drop 5 soul in here and then it hits 5 million, they make 15 Solana, bro. That's a fuck ton of money, dude. Like that's a lot of money, bro. That's thousands, bro. That's thousands of dollars. So, but that's what I'm looking for with these filters right here on Deck Screener. These are going to be my long-term gem holds. I'm waiting for, like, look at Rocky just popped up. I'm waiting for my gems to flip, market structure shift bullish, and then dip. And then once they dip to that internal range liquidity, look at what is it dipping into right now? A little fair value gap. Once it dips into that internal range liquidity, I'm buying, bro, and I'm holding. I am holding, bro. This is an investment. This isn't just like a day trade. This isn't just in and out quick scalps. These ones are gems. These are long-term gems. But something like Slim Jack, this is some shit where it's a quick scalp. You're just in and then you dip. You get in and out really, really quick, okay? Let's go back to Pump Vision. Froggy. See, like this one, it's not unique. It's literally just a cat dressed up as a frog, dude. Plot thickens. What the fuck is that? That's not a fucking meme, boy, bro. Like, I'm not laughing. Clarity. Post nut. See, like what the fuck? That kind of made me giggle. Like that's kind of funny, bro. You know what I mean? That's how you can kind of determine a meme coin, bro. This is a meme coin, bro. People just release coins and they're like, that's a meme coin. It's not a fucking meme coin, bro. It's not funny. It's not funny. Did you see a pupper fish? I'm like, oh, that shit's hilarious, dog. You know what I'm saying, bro? But that's what I'm looking for under about to graduate, graduated, and gems, okay? So, last but not least, bro, um, let me make sure. Last but not least, bro, this is going to be my Deck Screener quick buck filters and strategy, okay? So this is the quick bucks. This is how I look for like quick ins and outs, quick little jeets is what we call them, jeets. If you're a jeter in this space, it means that you pretty much just buy a coin and you sell right a fucking way. And it's also part of the basic terminology that I have in the doc. If you want to go get that doc. So with QuickBook, I'm going to go to new pairs here. Click newest. Once you click newest, click Solana. Click age, less than 1 hour. Click liquidity, more than 10K. Go to filters. And then once you go to filters, you're going to go to market cap minimum. You're going to put 15,000. Maximum, you're going to put 250,000. And then scroll down to 5-minute volume and put 10,000 and apply. Now what this is going to show us are all the coins that just released. It's going to show us all the coins that have some volume. It's going to show us the coins with liquidity. This filters out all of the bullshit, bro. There is no bullshit on our screen now. Slim Jack, the skinny, this fucker released 12 minutes ago. This was the one that literally just flew, bro. Like, Pepe Tard? Damn, actually Slim Jack just got melted recently, too. Look at that shit. People cheated, bro. People made some money and they just cheated the coin, bro. Look at that shit. They made money, cheated. Everybody sold off, dude. Sold it to zero, bro. And that happens so much, bro. That's why, personally, I don't recommend holding in this space unless you're holding like those gems. Okay, if you're hunting pump fun, if you're hunting about to graduate, if you're hunting these quick buck Jeep, bro, don't hold your whole position. Like claim partials and then fucking like leave a tiny moon bag, bro. And I'm gonna explain that. They got post nut. Post nut clarity just posted a minute ago. Let's see if the deck screener's paid. It's not paid. So that's a red flag. Ew, we don't like that. You know what I mean? So the strategy with this, okay? So you want to identify any new coin that pops up and the most recent released coins under 45 minutes, okay? What we want is for the 5M column to be green, signaling bullish volume, okay? We want to jump in on that volume with a good amount of position size for a quick Jeep play, okay? If that volume goes against us, we want to immediately close. Do not allow it to fucking melt against you. Don't allow it to. You want to protect your capital, bro. Protect your bread. Losing money is just as important as winning money in this game, so make sure that you protect your capital, okay? Before we jump in, we have to do a few more checks. We want to make sure the volume is 80K or more, okay? 80K or more. And the more, the better, okay? The more, the better. Always remember that, all right? You want to stay away from literally anything less, but keep in mind if it just released, it's not going to have that much volume right away. Like, look at Froggy just released a minute ago right here. Look at it's another one that's the same fucking thing that we just looked at. Look at and it looks like it already fucking it got rug pulled, bro. Right away. People are trying to build it back up, it looks like. People are buying into it. A minute ago, if we bring it up here, this is a good coin, bro. Let's say that we answered in right here. Okay. And you want to keep it simple with these too. You don't want to kind of overcomplicate them. But like I said, before we jump in, we have to do a few more checks. You want to make sure volume is good. The more, the better. Um, go ahead and delete that. You want to always make sure that liquidity. So if we come back over here, liquidity and market cap. You want to always make sure that liquidity is a smaller number than market cap. If liquidity is ever higher than market cap, it's a rug pull waiting to happen, bro. It's a scam. Stay away from it. You don't want to fuck with it. If liquidity is more than market cap, do not fuck with it, bro. It is a rug pull. Stay away. Okay. Um, Double check next to the token name if it has that emblem. These are all on the initial eye test here. So first we're looking at, does it have good volume? Is it green? We're looking at the newest. We're looking at, does it have an emblem? We're looking at liquidity and market cap right here, okay? If all of that shit checks out, if it doesn't have an emblem, we could throw it right into check decks right away and see if it has an emblem. If it doesn't, it's not a deal breaker. That's totally fine. We just, if it does, that's just more stronger conviction, okay? It's not a deal breaker because sometimes developers won't pay for it right away. They'll wait for it to establish a floor or something like that. There's many things that go into it, but it's not always important, okay? Like you could kind of run with it. Again, with this trading too, you want to keep it just as simple as the last one. Like checking decks is similar to SMT, okay? So you don't necessarily need it. It just adds a little bit more stronger conviction towards your play, okay? Now, with that being said, let's say that we want to go with a coin, right? Let's say we want to go with this coin right here. What we're going to do is we're going to copy it and we're going to go into BullX and we're going to search it, right? We're going to pull it up. We're going to copy the coin address. We're going to pull it up right here. I also forgot to mention too, if everything looks good, whenever like we're like right here in the screen, right? If everything looks good from this screen, we want to open it up in Deck Screener. Whenever you open it up in Deck Screener up here, sometimes it'll say ads right next to this, like right here for example. It says ads, bro. If it says ads, that means the developer of this coin paid deck screener to advertise their coin on their platform, like Shrigma. See, Shrigma has an ad. Shuri has an ad. So they paid for ads to be ran. And whenever they pay for ads, bro, that makes me a lot more bullish as well, dude. Like, developers know though that some people look just for that and they'll buy that just to scam them. But a lot of the times, bro, if it's good market cap, if it has ads running, if it has some holders behind it, it's a solid coin. It's a solid play, bro. Like the fact that this is at 498K, this is likely a very undervalued coin, bro. This shit could probably hit 2 million market cap, bro. And that would be a 4x on your game right there, bro. It's fucking crazy. Truthfully, the most money is made whenever you get in on the lowest market caps, and that's why we kind of try to hunt these ones over here. You know what I mean? We try to hunt these ones that just released. They have tiny little market caps, 60K. Because imagine we get in on something that has like a 60K market cap and it flies to a million, bro. Like we have the potential to like 20x our money or even more, bro. And like that's how fucking 16-year-olds are turning $100 into fucking 20 racks really easily in this shit, dude. It's pretty crazy. Anyways, so I wanted to once you bring it up, you can see if it has ads. If it doesn't, that's okay. But if it does, and it barely released and they already have ads, bro, I'm immediately just buying that fucking coin. I don't give a fuck. I'm not doing any more research. I am buying that bitch, bro. I am aping in. I'm keeping my risk managed though, okay? Don't get it twisted. Risk is always managed. But I will ape into that motherfucker. If it's newly released like 2 minutes ago and it has ads up here, oh yeah, bro, I'm buying that bitch right away. But that being said, whenever I open up deck screener here, whenever I open up the chart, one thing that I'm very much looking for, like for example, if we go with this one right here, pink, the meme games. Interesting. What I'm looking for is I'm looking for socials. Okay, I want to see a website, a Telegram, and a Twitter. Okay, see this one only has a Twitter, and the Twitter itself, if we click on it, oh great, I'm not logged in, so it's not gonna bring it up, bro. Come on, man. Here, let me try to log myself in really quick. I'm gonna blank out the screen really quick so that way I could log in really quick. So that way you guys can see what I'm looking at. All right, so we got it now. Boom. Okay, so now you are currently seeing what I am seeing. This is their Twitter. They have 2 followers, bro, and they've only posted one time in 16 minutes. This is terrible, bro. They have no website. They have no Telegram with like a Telegram community. You want a Telegram with a community because a community means that they have people who are buying it. So like if I click this one right here, this one has ads running on it. You can see it has a website, and you want the website to look like it has effort put in, because some developers will put together a bullshit website. If it looks like it took 5 minutes or less, bro, that's a shitty website, and the developer is a scammer, bro. Oftentimes they're just trying to make a quick buck. They know that we check for websites, and they're just gonna put together a bullshit website to make it fucking look like it's passing with flying colors. But this one, look at it, looks good. This is all original photos. This is all original as fuck. Original as shit. Mumat woke up in the dim of the light. Mumat. They give you the opportunity to like buy some right here on their website too. Tokenomics. See, you always want to see tokenomics. These are like if the LP was burned. Remember I told you 98 to 100% is what we want. This is where it tells you like different stuff and how to buy and all of that cool stuff. This is a beautiful website, bro. And then if you go to like their Twitter, let's look at their Twitter. 1,000 followers, bro. And then they have active posting, bro. They are actively posting, dude. They have people posting about them, bro. Look at that shit. People are posting about them, dude. this is a solid Twitter account, right? Now, Twitter and website, it's not a deal breaker. What truly, really fucking matters the most, though, is going to be this Telegram, bro. Telegram, you always want your coin to have a Telegram, and you always want your Telegram to have people in it. So if we look at this one, for example, this Telegram, what I always like to see too is I like to see, for example, let me bring up the screen real quick. Window capture. Boom. Okay. So that way you could kind of see what I'm looking at. So this is my Telegram screen right here, okay? So this is the chat right here, the channel and all that. What I like to see is tap to verify. If they want to verify that you're a human, that's already a very good sign, bro. But if it has like bullshit where it's just automatically joins you in and it doesn't even have any members, that's terrible. Look at this shit. It has 1737 members, bro. If you join the group, it'll show you people are rating, bro. They're rating. Whenever they're rating, they're actively, like, their community is actively trying to get people to get their coin noticed, bro. So whenever shit is going down like this, dog, this is giving you strong conviction that there's a community behind this coin. There's community here, bro. 1,700 people. And then they're also in a video chat. There's 19 people in a video chat right here, bro. This is giving me so much conviction that this coin is solid, bro. So if you see a new release, if you see something like, if we go back, if you see something like a new release that just released and they have a Telegram with that many members, if they have a legit website, or if they have if they have social medias like that, bro, all of that is such green flags, bro. Those are green flags as fuck, bro. If they don't have any websites or anything like that, I'm immediately not fucking with it, because truthfully, these are just developers who are on their own just trying to launch some bullshit, just trying to make a quick scam buck, okay? But if they have a community, they have a website, this is a developer who has a team. He's paying for ads. He's paying for the banner. He has a team put together to push the coin. He's building a community. That's a he or she, sorry. That's a developer I want to invest in their coin. You know what I mean? I don't want to invest in some bullshit like the pink meme games, bro. This shit has just a Twitter, bro. And it has no posts, bro. I don't want to buy this shit, bro. Why the fuck would I want to, dude? Like, it's terrible, dude. Now, let's say that we find a coin that's so legit, right? Like, it's legit as fuck, right? Let's say that we find that coin. We find that coin, what we're going to do is we're going to copy the address. Bro, look at Froggy. Released 12 minutes ago and they're running ads on it. This is an example that I was just talking about, bro. They're fucking running ads on this bitch, dude. Look at this one, was released 53 minutes ago, bro. But they're not running ads on this one. They're running ads on... Or actually, it's the same one, sorry. They're running ads on it, bro. So because they're running ads on it, they're trying to get their tokens seen. They have 352 holders in this bitch. If we opened it up, if we went to their Twitter, they have 149 followers and they're not even following anybody, bro. Look at they're posting, they're actively posting. 14 minutes, 24 minutes, 27 minutes, 1 hour. Bro, they're actively posting like every 15 fucking minutes. That's beautiful, bro. If we go to their Telegram channel, look at, dude, their Telegram channel. Tap to verify, bro. Hell yeah, let's fucking verify we're human. Boom. 524 members are in this group, bro. If we join the group, they have their buy bot up, letting you know whenever people buy and shit. Look at Dex ads is paid. They have a video chat going. See, they're in there actively working, bro. This is a legit community. I like this. This is a beautiful coin. The fact that it's literally sitting at fucking 39,000 market cap is crazy, bro. It is crazy to me, dude. This is a fire coin, honestly. This is a great coin. So, Froggy, shit, I entered up here, but I would dollar cost average in right now if it were me, and I'd enter in again right here, try to get a better equal position around like 52K or something like that. That would be solid, bro. But once everything looks good, we checked out their socials. Everything looks good. Like it's running ads on it and everything, bro. I'm going to copy the token address. I'm going to pull it up in BullX. I'm going to bring it up right here. And I'm going to go to the audit. I'm going to make sure the audit says no, no, no. I'm going to make sure it's 98 to 100% LP burned. And then top 10 holders, this is a little high, but with the amount of holders in this, it's totally fine, bro. It would be different if this was like 60, even if it was like 100 or less with 30%. That's kind of scary, but matter of fact that it has this much, it's not too bad. You know what I mean? So look at the developer is in the position as well. Developer has 4.3% of his holding in here too. So Froggy is looking good, bro. But like once I've checked socials, once I've checked everything, once I've brought it up and put it into BullX and look at the audit, make sure it's 7 out of 8 minimum and the one off is the top holders. If this all looks good, um, if it looks great, like green flags, what I'm gonna look for lastly is under holders. I'm gonna look for to see if there's repeating percentages, because repeating percentages, oftentimes these developers, they're getting very fucking smart. They know that we look for that top 15 or that top 10 holders check, and they know that if they put 15% in one wallet, bro, it's not gonna pass a rug check. They're gonna get red flagged right away. So what they're gonna do is they're gonna diversify that same 15% and they're gonna put it in like 15 different wallets and put 1% to each wallet, or they'll do 30 different wallets and they'll put 0.5% in all 30 wallets. And it's still the same one person holding all of those wallets. So if they fucking wanted to, they could sell all of it and rug pull us, bro. And so that's why you want to check to make sure that there's no numbers that are repeating here. No repeating numbers that are like super similar. Like 33, 34, there's only like there's only two 34s. It's not any 36s. There's only like one of each of these. But whenever you start seeing like multiple, like 5 of each and all that other shit, that's when it's like, yeah. And then whenever they equal out to like 10% or more, bro, that's whenever it's like, red flag. Yeah, no, fuck that. But if everything so far is a green flag, you know, you will get quicker at checking all of that. So first, again, from deck screener, right here, we're gonna make sure green. We're gonna make sure liquidity is smaller than market cap. We're gonna make sure that it has an emblem. If it doesn't, we're just gonna open it up, put it into, copy the address, put it into check decks, see if they paid it. Of course, you don't have to do this step. Look at paid. So they paid for this one. Oh, this is Froggy. I literally just copied this one, bro. We want to see Fen. Yeah, Fen right here is not paid. A red flag, but not the biggest, right? So if we go back to it, we're looking for socials. No socials. Red flag. Stay the fuck away. You know what I mean? But we're doing the initial eye test, bro. The initial eye test starts on this screen. Thickens. Thickens right here was released 6 minutes ago. We want to go with the newest. It's red right now. It's not super horrible. We want to make sure the liquidity is smaller than market cap. See if it has an emblem. Open it up. If it does or doesn't, we can always just still check if it's been paid. Check decks. See if it's been paid. It's been paid. Perfect. So this fucker's paid it. He only has a Telegram. If we click on the Telegram, it has 66 members, a buy bot. It doesn't have that. I don't think y'all can see it. It doesn't have the verify though, bro. Oh my goodness gracious, relax. It doesn't have the verify that you're human thing though. But with this one, it has activity. It has video chat. 13 participants are in it. Dex is officially paid. It has the little fucking buy bot going, and it has activity, bro. So this is a decent Telegram channel. Okay. So to give you a little example right there. Oops. To give you an example, this one only has a Telegram. It literally has no website. It doesn't have anything else, bro. It's fucking dying right now, but has 354 holders. Decent amount. What we can do is we could take it, we could put it over here into fucking BullX, search it up, boom, and we want to make sure that it passes the audit right here. It says caution, 7 out of 8. No, 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 perfect, 100% perfect, top 10 holders, perfect, sounds good, it's under 30%. Now let's look at the holders really quick, make sure that it's not repeating percentages. There's some 67s. Not a lot though. It doesn't equal out to too much. Bro, all in all, this looks decent for me. You know what I mean? I know it's dying. I know it's red as fuck right now. But I would low-key kind of take a gamble, okay? I would take a gamble. I would place a small buy right here. I would look to buy it up right here off of this floor. It has community behind it. It has holders behind it. It has a developer buying ads. You know, the Dex ads are paid. Like the developer is involved. Video chat is going. The audit is good. You know, it has a lot of conviction behind it, telling me that it's a good coin versus a scam. You know what I mean? And realistically, we're investing in coins that have community behind them, because community are unless there's people investing in these coins, they're not going to go nowhere, bro. So we need people and a community behind the coins, and this coin has proven that it has that, right? So that's how I check the quick bucks. That's my strategy with the quick bucks, and like what I'm checking to make sure that I don't get rug pulled, to make sure I don't get scammed, to make sure I stay out of those. Um, I know it was kind of confusing. If you have questions about it, you can always comment, and I'll answer your questions in the comments below, and I'll also make more videos in the future. But to kind of continue, how much do you risk? You always risk what you're comfortable with losing. However, if you want to make some real money in this space, I recommend risking no less than 10% of your balance, okay? Again, not financial advice. When do you take profit? Personally, I aim for 30% or more gain. If you're a jeter like me, because in this space you kind of have to be a jeter, bro. If you want to have diamond hands and be a holder, that's fucking awesome. Hats off to you, bro. But I'm only diamond hands for like Keith, Rocky, Selfie, and those big gems. You know what I mean? And whenever it comes to these coins that just released, I am a jeter like fuck. Okay, but if you have diamond hands, you can target 200% plus. And regardless if you're a jeter or diamond hands, always, always, always leave a small moon bag. Okay, it can literally be a 0.01 of Solana. It can literally be dust. It could be nothing, bro. But you want to leave it as a moon bag just in case this shit flies to millions, bro. Because you never know. With these coins, we never fucking know if shit will fly to millions, okay? So you always want to leave a moon bag just in case it flies to millions, okay? Always, 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 always leave that moon bag. What if your coin goes to zero while you're still in the position? If your coin goes to zero, like for example, GigaCat, this is my coin right here. I bought it recently, and it fucking died immediately after I fucking bought it. It pissed me off. I was so pissed. I bought it, bro. I bought it on a dip, and immediately it died. It never came back up into profit. I was like, fuck me, dude. But see, it still has 877 holders in this coin. Fuckers are holding thousands of dollars in this coin, bro. You know what I mean? Like thousands. Like there's a lot of money still sitting in this coin, bro. So just because it went to zero, never, ever, ever sell. Because you're selling for literally nothing, bro. Like right now, my So 5 days ago, I bought 0.18 of Sol of this specific coin, right? If I sold right now as we speak, I'd be getting 0.05 Sol. So it's literally like like a quarter of this shit. It's literally nothing, bro. It's dust is what they call it. So you never want to sell your dust. And the reason why you never sell your dust is because it's been heard of many times where all of a sudden these coins like will pick up a community where someone will come and shill this coin and they'll buy this shit up like a motherfucker and they'll send that shit to the moon, bro. And it's happened many times. So never ever sell your dust just because you never know if the coin flies. And whenever you're selling dust, you have to pay gas fees, you have to pay bribe fees, you have to pay all those fees just to sell. So if you're selling to make nothing, you're losing money, if that makes sense, bro. So never ever sell your dust, bro. Just leave it alone. Set like a take profit above where your average price is. So if it does fly again, it stops you out and take profit, and you don't lose any money in the end. Okay. When do you DCA into the play? So DCAing is that dollar cost average. I only recommend DCAing into the play on long-term gems that you're gonna hold, on graduated memes, or when you bought the top and not a dip. And again, we rarely buy tops, but only when we are buying into volume and nothing else, bro. Those are the only times I will ever DCA into the play. Other than that, if it goes against me, I am closing that shit immediately. I am breaking even. I am not allowing it to go against me, okay? Now, where can you find alpha? Alpha is another term and word in the space for like top tier game, top tier information and knowledge, you know what I mean? So where can you find some alpha? You want to do your own research with the strategies that I provided you, or you can follow me on Twitter at SoulDgenHotshot. I'll leave a link to my Twitter in the description below so you can follow me. I'll post alpha when I come across them. And then follow everyone that I'm following, okay? Everyone I follow on that account are fucking legends, bro. The secret is following the right accounts, especially trench warriors, okay? I also, in this document that I'm leaving in the description below, I'm also providing you 2 lists on Twitter of the best trench warriors and alpha callers in the Solana meme game, okay? So I'll leave those below. Another place you could get some alpha are Telegram channels, are another great way to find alpha. I am also leaving about 8 different Telegram channels with different callers in this document in the description below as well. Join all those telegrams. They will give you some game, bro. But with all of that said, there you have it. You have hours on hours of information thrown at you, and now you have advanced knowledge to create generational wealth for yourself and for your family. You can follow me on Twitter or X at Soul, SOL, Degen, DEGEN, Hotshot for meme coin plays. I'll try to post some Forex trading on there. I'm going to probably separate that into a second account. But I'm also going to be live streaming on Kick, live trading meme coins and Forex. I'm going to be posting the schedule to that in the Discord and the YouTube community channel. Check the description for the link to the document. Check the description for the link to BullX. Check the description for the link to our Discord. Check the description for all of that good stuff, okay? If you've made it to the end, thank you so much. I truly do appreciate it if you made the end. I'm so excited to be back on YouTube. It is so exciting to make this video for you guys. It's awesome. I know you learned a lot with this video. I know it was a brain fuck. I am excited to see your journey. So keep me updated through Discord, through Twitter, or even in the comments. Let me know how you're doing. Let me know if you have any questions. Let me know how I can help you, okay? Till next time, I wish you all well and enjoy trading. Take care.